is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. I did the opening there. They tried to find a quote of mine, Paul.
Did they?
Where I'm almost like in English and clear. And I'm saying Donald Trump needs a weak dollar. The way you start with a weak dollar is to tell the head of the Federal Reserve System, cut rates before 2 p.m. today.
Exactly. That's happening today, Tom.
Well, you got to see.
You guys will
what
have
do you
full
think?
coverage of that starting at 1:30, I believe.
We're going to have that. But do you think that the president comes out and lectures Jerome Powell before or after the press conference?
Yeah, we'll see. We'll see. But again, he's independent. It's an independent Fed, so to say.
So they say.
Yep.
We'll see. Mike Green's going to be with us here in a moment for a lengthy conversation. We're really going to drive into that as he says the Trump era has begun, and we'll have to see on that resilient dollar. Dollar resilient today. We see that. We say good morning on your commute across the nation on Apple CarPlay, Sirius XM. Good morning, Android Auto. Good morning, 99.1 FM. The ratings were 57 million for Chiefs Bills. Could you imagine if the Commanders had won?
Yeah, exactly.
We would have topped 60 million right there. We say good morning up to Boston, 92.9 FM as well. And on YouTube, subscribe to Bloomberg Podcast. Thanks for your interest, particularly off the Monday festivities, I believe we covered. Let's get right to it from the Interactive Brokers Studios. Our Bloomberg Business Flash, Lisa Mateo.
Yeah, and a day after Wall Street rebounded from that global market sell-off, futures advancing this morning. The focus shifting to the Fed's interest rate decision, also U.S. tech earnings. After the bell today, you've heard it. We'll hear from Microsoft, Meta, Tesla. Also, can't forget IBM as well. Not much movement in those shares before the bell. So let's get to NASDAQ futures up 0.3%, 84 points. Dow futures little changed, up 9. S&P futures up 0.1% or 6 points. We have the 2-year yield at 4.19%. That's little changed. The yield on the 10-year, 4.53%, and that is little changed as well. Heading to the Bloomberg Dollar Spot Index, that's little change. We also have more earnings before the bell. We're waiting T-Mobile and Hess. I don't see it just yet. We'll definitely keep you updated on that.
What about that? Yeah, come on, it should be up by now.
I'm waiting for the headline to correct. It's not going yet. But since we're waiting for that, we'll go to Dutch chip-making machinery maker ASML because their shares on the rise. Their ADR is up about 6%. Order bookings beat estimates. A big part of that was AI. But that really helped ease the concerns over DeepSeek that we've been hearing about, sparking gains for some chip stocks.
And does it set up this afternoon? It sets up Meta and Microsoft,
correct,
right?
Sets that up. But then you have like the chip companies who have taken a hit now seeing the rebound. You have AMD up 1%, Broadcom up 2%, Marvell up 2%. NVIDIA, though, is down 1%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. We're watching T-Mobile come out. I tell people when I talk about the failures in my life, I just dismiss T-Mobile and the crazy guy with the long hair, Paul, with the magenta T-shirt.
John Ledger,
And I had the honor of saying to John Ledger how wrong I was. He laughed. He said, well, get in line.
Get in line. Exactly right. No, it's been a great story there.
This is a joy because we keep very much track of people we short. Oh, Mike Green, I'm sorry. We got breaking news. You're going to be on for a minute and a half. So this morning, I don't care if there's breaking news now. We're not going to go to it. We're going to go to Mike Green here to get some good analysis about what's going on, of course, with Simplify Asset Management. I look at the Washington Post feed, the New York Times feed. It's nuts out there. How do you synthesize the chaos over into just remain calm to execute investment process?
Well, I think all of us are kind of hoping that chaos that you're describing is just the flurry of blows that comes out from an aggressive boxer in the first round, and that eventually it settles down. But it is remarkable when you kind of look at what's happening. We used to wake up to market volatility and look to the politics to explain it. And instead, today, we're looking at political volatility, and the markets remain totally sanguine. I think a lot of it is just we don't know what to do.
Right. Man, I look at it, folks, I don't know if you knew this, but Lisa's newspapers at the back end of the 7 o'clock hour, that's funded by an NGO. a government thing. And the answer is like even NGOs are I guess are unfunded right now. Something like that?
Yeah, so this is the key question. Now, a federal judge has put a stay on this for a week. We'll find out on Monday what the ultimate decision is around this, or at least what the next step in the process. But yeah, this decision to stop funding the NGOs, et cetera, in pursuit of basically making sure that Trump's executive orders are enforced, is going to be one of many questions. We don't know how many payrolls can't be met. We don't know how many different firms are ultimately going to be affected by this, how many commercial real estate properties that are currently housing people are suddenly going to be faced with their bills unpaid. We just don't know.
Is the best advice for an investor to try to ignore the noise and focus on the fundamentals? We have earnings this week. Maybe that's really what matters?
Well, we do have earnings, and I heard earlier the commentary about, we're excited that ASML's orders are off the charts, but remember, ASML is reporting off of a December quarter. Right. Yep. DeepSeek came out on this past week. We've also known that this was kind of the case, right? This is very much like the development of, multiple signals and amplification that happened in fiber optics that changed the tone around fiber optics.
I got to go here. Elisa, help me out here. T-Mobile's out. One of Lisa's entourage whispered in my ear, go to her on T-Mobile. I mean, it's plus 221, and it's up $7 now.
Yeah, earnings smash expectations for it. So I wanted to look. Let's check in with the shares.
T-Mobile.
Do you know I pay a mortgage payment to T-Mobile? Remember Vince Farrell?
Yeah,
Vince Farrell was just such a great supporter of Bloomberg surveillance. I miss him every day. We lost Vince Farrell way too long. We used to sit in tears in the radio studio with Ken Pruitt and try to figure out how many children, their phone bills we were paying.
Oh, yeah.
And with T-Mobile, good morning, T-Mobile.
Up 3%.
I hope the mortgage payment helped. Pa, why don't you keep us going with Mike Green?
Hey, Mike, so we sit here, we had 2023 and 2024, both north of 20% returns on the S&P 500. How do you think about 2025 going into the year? I mean, should we just temper that and hope for a single-digit return? How do you think about it?
Well, I'm often reminded of an event in late 1999 when I asked my mother-in-law, she'd had a phenomenal 1999. I said, what if stocks were up 15% in 2000? Would you be surprised? She's like, yeah, I'd be really surprised. And I'm like, well, then why not take something off the table? And her reaction was, I'd be very surprised if they were only up 15%, right? So if you actually look at what's happening in the market on a year-to-date basis, a lot of the not Mag 7 stocks, the NVIDIAs, the non-NVIDIAs, et cetata of the world, they're up sharply. The Dow's up almost 8% before the first month of the year is out of the way. So it's hard to argue this is going to be another calm year.
We're going to hear from the Fed today. Tom Keene and the surveillance team have full coverage starting at 1:30 p.m. Wall Street time. What should we expect anything from the Fed this year, or just kind of sit on the sidelines and follow the data?
This is we definitely want to follow the data, but one of the things that I think is really critical here is the market is only pricing about a 10% probability of a cut at this meeting. They're pricing very low probability of the idea of a hike throughout the year. That's backed off since obviously NVIDIA. But if we look at that commentary that's going to come out, this is where we're really going to find out what the Fed is thinking.
I agree.
So we aren't going to know with the press release. We know what's going to happen. The Fed is not going to surprise the market there. Whether Powell chooses to react to the first week of the Trump administration in terms of answering questions, implications of it, inflation, concerns, we genuinely just don't know.
I totally agree. I just refuse to believe it's a snooze fest with all that's going on politically in Washington. A treat, Mike Green with us to Simplify. We continue here an extended conversation to begin your day. Many other worthies coming up at the Fed meeting. And on the equity markets, Cam Dawson will be with us later as well. The NASDAQ, Paul, up 0.4% right now.
So, Mike, what do you expect here for earnings? If I've got a Fed that's going to be kind of quiescent, we're going to say, for 2025, maybe one, maybe two rate cuts, it puts a lot of pressure on earnings, doesn't it?
It does put pressure on earnings, and one of the most important areas that puts pressure on earnings is actually from not the leading companies, those companies that are flush in cash, et cetera, but those companies that are now facing refinancing. So if we look at things like the high yield index, we've actually seen credit spreads compress, but many of these companies have not refinanced that paper from the 2020, 2021 time period. You're now approaching that maturity wall. And when these companies refinance, even though credit spreads are tight, the absolute level of interest rates are a lot higher. So in many of these companies, you're talking about going from 4 to 4.5% coupons to 7 to 7.5 or 8% coupons.
Mike Green, how do you perceive Apple? On Monday, we had a total full-scale panic, and everybody turned to Cupertino and said they're not doing the CapEx ballet. Is that a heritage from Steve Jobs? Is that a Tim Cook thing, or is it blind luck?
Well, I think it's a combination of components. So Apple has always been a capital-intensive light business. They've always chosen to outsource their manufacturing while keeping control of their intellectual property. But I think the much more important message is nobody lost their job on Monday. And so 401k flows continue to come into the markets. Investors are continuing to pile in. A lot of this is a function of the autopilot of the way that we've set up flows into our system. When people are working, they're contributing to the stock market. That money is flowing into an index fund.
Right.
And guess what that index fund is buying?
Spring training, February 9th. The Dodgers play in Tokyo.
Oh,
So
boy.
they're starting early spring training. What inning are we in, Mike Green, of this bull market?
I have thought we've been in extended innings for an extended period of time. A typical bull market lasts for between 3 and 5 years. So we're probably getting towards the end of it. Am I yet ready to call my mother-in-law and say, you must get out? Not quite.
So we had some news earlier about this whole China AI thing, and we're all trying to learn it literally on the fly. AI has been a theme for this stock market really for a couple of years now. It's been a supporter of growth, and it just means so many positive things for so many different industries, was the assumption. Did anything change for you with this DeepSeek news earlier this week?
Well, the fascinating thing is that the DeepSeek news was actually out weeks ago, right? So, and candidly, months ago. So the key innovation was actually the handling of memory components. They announced and released a paper in August of, I think it was actually August or July of last year, that actually highlighted these breakthroughs. And a lot of this stuff, if you just think about it in evolutionary terms, is really straightforward. Can we do more computing with less energy? Can we actually split up our brain in terms of a reptilian brain and a mammalian brain, the cerebellum, et cetera? That's all we're doing with these components. They're natural evolutionary processes that simply say these things are getting better and cheaper, et cetera. One stat I just wanted to share with you, if you look at the actual inflation-adjusted price of an Apple II, the DeepSeek innovations basically drop the cost of AI, an LLM for the average individual, down to roughly the same inflation-adjusted cost as an Apple II in 1977.
Mike Green with us to simplify. We're going to continue an extended conversation to get us going. Futures up 5, red and green on the screen, but I got a NASDAQ up 0.4%. Meta and Microsoft this afternoon. And more importantly, Paul, help me. In the 11 o'clock hour, you have the chief executive officer of T-Mobile.
Yeah, I think so. Absolutely. 11:15.
Did you pay your bill? Or
I think we're all good.
We're all good on that?
Yeah, hopefully he won't be coming with a collection notice. Yeah, so we'll get the latest. I mean, that telecom space, Tom, the wireless space, it's so competitive, but we'll have to see.
So competitive, it's killing me.
Killing me, exactly.
It's, you don't think, oh, you get this, it's all free. And then 90 days later, it's like,
Boom.
Hello.
Yep, exactly right. Hey, Mike, what screens well for you guys these days? Are you, I think probably the last 10, 15 years, technology has led this market. Is technology still going to lead this market going forward, do you think?
It's hard for me to see leadership change in a very meaningful way because I spend so much of my time focused on the passive components. And these largest companies, there's a friction that is created by these orders, and so it just pushes the leadership further. This Monday, when we had the news of DeepSeek and the hit on NVIDIA, I ruffled a lot of feathers by saying, I just don't see why this is going to change. And here we are 2 or 3 days later, semis are back in charge, markets are being led by the largest companies.
Well, how have ETFs changed this? And the fact that Mike Green and I and Paul Sweeney, I mean, I'm going back to MUFG Securities here now, way back. This is right after the Confederacy pulled back from the Shenandoah Valley. And the basic idea here is we used to rotate. Baloney. We don't rotate anymore. How have ETFs and the dynamics changed that?
Well, it's interesting because you actually can see the rotation. So immediately after Trump's election, we saw small caps take off, right? And you saw the actual flows into things like the IWM ETF. You can track the shares outstanding. There's explosive buying of that on this theory that we should rotate. Well, guess what? Once you've rotated, what do you do next? You reverse rotate. And so small caps then saw people basically move away from them. And the market went right back to doing what it was doing before, which is the vast majority of the flows are people who are not rotating, not doing anything other than putting money in their paycheck into the market on their 401ks on a weekly basis or a bi-weekly basis.
That's the second time you've mentioned that. I mean, the financial media is ignoring, and Larry McDonald was brilliant at this. There's just this wall of money almost inputting into the market on a daily basis, right?
Yeah. It really is, and that money flows in, and what does it buy the most of? NVIDIA, Apple, Microsoft, et cetera. Now, the relative shifts, like things like NVIDIA catching fire and people waking up to it, that's actually exacerbated by this, because if you think about what ends up happening,
Right.
Tom Keene and his brilliance, it's like NVIDIA, it's the future. I'm going to buy some of these shares. Well, who's going to sell those shares to you? The passive index fund will not sell those shares to you under any conditions unless a general seller order comes through. And so you're competing with other people who are having the same insights. That can cause that sort of sharp outperformance that we've seen. But once it's there, it's kind of built in.
Mike, one final question. We got to get Michael Barr in here, but one final question, and it's just simply, what do you say to our listeners and viewers in cash?
Well, this is a very challenging one, right? Because the FOMO component of watching your neighbor get rich is really, really difficult. I just keep emphasizing for people, invest for what you need, not what your neighbor wants. And the reality is that we've got real interest rates through tips and through duration at this point that are attractive enough to allow many institutions and many households to meet their objectives in terms of retirement. I just encourage people to make sure that you're thinking about that income portion of your portfolio and recognizing that the volatility that we are not seeing currently will eventually return.
Did you get enough time today?
I did.
Mike Green, thank you so much. He's been in here, folks, like 3 times. It's, oh, Mike, I'm sorry, you're on for 90 seconds. It was great to have an extended conversation with Mr. Green at Simplify Asset Management. Special treat coming up later, someone we never have on. His press called me up and they said, Craig wants to come on. He's not wearing makeup. Craig Torres, our giant Fed reporter, will be in the 9 o'clock hour. He's got some really important comments on research on the middle class of America. Craig Torres on this Fed Day is a special treat. With red and green in the screen, 57 million people watch the Bills lose. With our news, Michael Barr.
Thank you very much, Tom. Paul, Lisa. A federal judge temporarily blocked the Trump administration's directive to halt payments of federal grants, loans, and other assistance to various programs. White House Deputy Chief of Staff Stephen Miller said President Trump's executive order said the freeze does not affect any federal programs that Americans rely on, but said spending will be reviewed to conform with the administration agenda.
It's a review process to say that there's, for discretionary spending that's not directed by Congress or required by law. So this would be, for example, something like a contract to a non-governmental organization to teach, say, critical race theory.
It comes as the Trump administration says it is offering buyouts with at least 7 months' pay to all federal employees who opt to leave their jobs by next week. It's an unprecedented move to shrink the U.S. government. Caroline Kennedy warned senators that her cousin Robert F. Kennedy Jr. is, in her words, a predator. She's urging senators to reject his nomination as Health and Human Services Secretary.
I've known Bobby my whole life. We grew up together. It's no surprise that he keeps birds of prey as pets, because Bobby himself is a predator. I urge the Senate to reject his nomination.
RFK Jr. is set to appear today before the Senate Committee on Finance, which will decide whether to advance his nomination. You can catch coverage of the hearing starting at 10 a.m. Wall Street time on Bloomberg Radio and the Bloomberg podcast page on YouTube. A stampede broke out at the world's largest religious gathering in India, leaving at least 15 dead and many injured. A huge crowd of devotees turned up for a holy bath at the Mahakumbh Mela in northern India. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Okay, we got to go to this. John Stashar saved the day for me. 57 million watch Bills Chiefs. This is awful announcing the blog. A year ago, an NFL official told reporters on a Zoom conference call that the league had not adduced, at least yet, that sports gambling led to higher ratings. Are you kidding me? 57 million people watched? That's a lot of Bills fans.
I think there's a definite correlation between the proliferation of sports betting and viewership.
Oh,
particularly like the red zone.
Heck yeah, because the thing is moving, I'm sorry to put it this way, like a stock market through the whole game. You're trying to see now, okay, now they were up 3 points. Now you're going to, the odds change. Now do you want to make this bet here or there?
Does Mrs. Barr bet more in the third or the fourth quarter?
She says that I need to take out the trash more often. But I can tell you, Mr. Barr, it goes from start to finish. I mean, it's from the first quarter to the fourth quarter. I'm still in there.
Paul, I did a speech in Las Vegas once, and I'm naive on this. I stood in Caesar's Palace.
Yep. Solid.
And saw this.
One of the best sports books.
A million years ago.
Yep.
You know, if Robert De Niro had walked through, I wouldn't have been surprised. In Casino, we're beyond what we grew up with, right?
Oh, yeah, everything's right on your phone, like everything else in your life. It's on your phone, and that's what. Now, and here's the thing: this weekend, in the local luncheonette down to Jersey Shore, high school kids talking about betting.
Yeah.
They're betting.
Yeah.
On their phone.
Lisa, is that
is
what you
not
heard?
good.
No, it's true. Yeah, my
I'm
daughter
having a
tells me.
lecture
Yeah,
tonight at dinner.
they do.
We're having
During class time.
During class time, they're doing bets.
That's
Tonight's,
a problem.
You know, Fed Day, we have Swanson TV dinners.
Yep.
Fed Day.
Right. Yep.
Line them up in front of the TV. That's how we work. Brian Eggers will join us with Bloomberg Intelligence. We're going to spend a lot of time in 2025 on this. Paul and I got some real concerns about this betting effect as kids bet, as Lisa says. In the classroom? Really? It's Fed Day. Future's up a stick. It's Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. oil production exceed 13.61 million barrels per day for November 2024? Well, you can trade your prediction at IBKR Forecast Trader. The yes was recently at 35%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. All right, we got futures, a little bit of red and green on the screen. This is after a really rough start to the week. Worries of a cheap AI model from Chinese startup DeepSeek. Now all eyes turn to big tech earnings. Microsoft, Meta, Tesla after the bell today. We also have interest rate decision by the Fed. Policymakers expected to hold those borrowing costs steady. We shall see later this afternoon. NASDAQ futures up 0.4%, 85 points. We have S&P futures, little changed up 2. Dow futures, little changed down 11. The 2-year yield 4.19%. That's little changed. And the yield on the 10-year 4.52%. And that is little changed. We have Brent crude lower, down 0.7%, $76 a barrel. WTI crude $73 a barrel. And the Bloomberg Dollar Spot Index up about 0.1%. T-Mobile, yes, added more phone customers than Wall Street expected over that final quarter of 2024. Profit rose more than 50% from a year ago, so its shares are up about 8% right now. And you can hear from the CEO himself. He's joining us live at 11:15 a.m. Wall Street time. All right, demand for high-end brands, that's improving, but really not as quickly as hoped. Louis Vuitton owner LVMH down 5% in Paris. Disappointing sales. Looks like Taylor Swift did not help out in that category. And finally, Starbucks up more than 1%. Better than expected quarterly results. Its shares are up this morning. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash.
And Lisa, very quickly there, thank you for mentioning Louis Vuitton. And the thing that's really interesting, they own Sephora.
Yes.
And I went to a pro on this. I'm sorry, I don't have the name in front of me. Out on Twitter, and Sephora didn't save the earnings season, but it was the one lift they had. And Sephora at Kohl's department store.
I was about to say at Kohl's department store.
It's a huge
success. It's a big draw.
Huge success. Thank you for that.
I just remember, Tom, during the pandemic when everything was shut down, the Sephora store across the street packed.
Yeah,
I mean,
absolutely.
You know,
absolutely.
It's like, holy cow.
Especially with teenagers.
Yes.
the Louis Vuitton thing at 57th and 5th Avenue, the big box,
Yep, sure.
I've heard more buzz on that
I have too.
than
That's
anything in New York City.
Absolutely.
Have you seen it?
No, I don't. Come on.
He doesn't go below
in it.
59th Street.
It's too tempting.
Mrs. Keene called me up. She goes, I'm in the cafe in Louis Vuitton over where Tiffany's used to be. I'm like, great. Hold on to the wallet.
Yep.
Okay, we're going to be real quick here because we have to talk to Amanda Lynam of BlackRock about adult material. But we got to do this first. This YouTube thing I'm doing and Paul's doing, our heads are spinning. It's all new. CNN's dealing with it. Everybody's dealing with YouTube. And we have a team that's been brilliant. The word they use, Paul, Colin of the Twins, says discoverability.
Oh, okay.
And the biggest thing I did is I switched to YouTube Premium. It's $167 a year. If you pay annually, it's $10 a month, $120. Amanda, you did the same thing. What's the difference you perceive in YouTube Premium versus regular run rate YouTube?
I love it, and thank you for having me because I can watch you guys on 2 times the speed without the commercials, so I
Which
can
is
stay
okay.
informed. Yes, so I can stay informed, but it takes half the time, and it's amazing.
Takes half the time.
Exactly. But I can. You guys are so good that I can follow along. Yeah. So
It says 40 years of fixed income
That's right.
analysis. When you're listening at 2 times the speed, how will you listen to Jerome Powell at 2
I will,
times? That's an idea. We
Yeah, I
could do
know.
the press conference at 2 times the speed.
Exactly.
What are you going to listen for today?
Today, I'm going to listen for 2 things. 1, do we still think that policy is meaningfully restrictive? And then 2, what is the bar for cutting rates? Is improvement in inflation enough for them to cut rates? Or do they actually need to see further cooling in the labor market? I think that will tell us a bit about the forward path. I'm not expecting really a cut to be on the table even in the March meeting because the January seasonality and inflation will probably distort the numbers a bit. But I do think that as we move towards the second half of the year, we'll want to see what the next action is in terms of an extended pause or a cut.
Across the fixed income community this year to date, just so far here in January, we have some positive
right.
returns here led by high yield. What is the macro credit call for
Yes.
you guys in 2025?
So I think the lesson from 2024 is that there was an opportunity cost to being too defensive.
Yep.
And really our view on credit in 2025 is you just have to be very clear on why you're buying credit. We're recommending that investors buy credit for carry and for yield, not for the total return boost from, for example, tightening in spreads or a decline in rates. Spreads are already quite tight, so there's not a ton of room for absolute spread tightening from here. And our base case is that structurally higher interest rates will prevail. So if we do get a boost to total returns from those typical drivers of total returns, that would be a bonus. But actually, we see a pretty compelling opportunity from the all-in yield perspective and corporate credit.
How do you feel about investment grade versus high yield?
Yeah, I actually am comfortable moving down the quality spectrum. I would say for investors that can only play in investment grade, triple Bs are a nice option for that. So moving down in the quality spectrum. I would say the big takeaway over the past few years, frankly, is that there's a lot more fluidity between these markets. Actually, if you look at credit metrics between the high end of high yield and the low end of IG, they're converging. There's not as steep of a penalty for a company to fall from IG to high yield. We're just seeing a lot more of the blurring of the lines. And so that line of demarcation between IG and high yield is much less punitive than it used to be. We actually like moving down in quality. Now, I would say when you get into things like triple Cs, especially on triple C loans, have underperformed because of certain technicals related to CLOs and rating sensitivity. You have to tread a bit carefully. But in general, we like credit risk. And I looked at the Atlanta Fed GDP now, 3.2%, solidly above trend. And so that's the key for credit is the growth backdrop.
I agree. This is my main theory is the number one thing we've been wrong on has been the growth story. Is a continuum. Does BlackRock believe the growth story continues?
We do, and I would say the one signpost to watch, because I think amid all of this uncertainty and volatility, we just need to know what to watch for. The growth story has been hinged on the U.S. consumer remaining resilient. The pockets of weakness that we've seen have really been confined to the low end. That's because the labor market is in this kind of low hiring but low firing environment. I think the key, Tom, for that to change is that if corporates start flexing the layoff tool more aggressively, that might allow the weakness in the consumer to extend beyond that lower income cohort. And I think that could be the risk to the U.S. economy because we know the consumer generates 2/3 of GDP.
Paul Sweeney, Craig Torres joining us here in the 9 o'clock hour on that lower income cohort. He's got some brilliant research.
Amanda, are there some sectors that screen well for
Yes.
you guys right now?
Yeah.
What are you guys focusing on?
Still like financials.
Okay.
I think when you think about some of the tailwinds in terms of a rebound in capital markets activity, steeper yield curve, deregulation possibly, less exposure to kind of global trade tensions.
So when
that's
the
a
banks
sector.
report their earnings on a Monday, they come out Tuesday with these huge bond
Yeah,
offerings. Do you pick up the phone there?
The new issue market is a really attractive way to put capital to work because those deals often come at a spread concession, right? So that's a way that investors can kind of participate in new issue pricings. Financials are a massive part of the investment grade index, but even outside of financials, I think there are a lot of sectors.
Okay. Can mere mortals buy new issue paper? Or is it like the junior members of BlackRock? No, you can't have that. Amanda has it.
No, the new issue markets are wide open. And actually what we've seen even with some of the volatility in recent weeks is that deals are multiple times oversubscribed, trading well on the break.
I saw one was 4 times. I can't remember which one it
so
was.
I think that's really and there's been some consternation in the markets, obviously, with some of the news flow and whether or not we should read this to be risk off in terms of the rally in treasuries that we saw. Credit spreads were incredibly well behaved, and in fact, the modest widening that we saw on Monday has, for the most part, been completely retraced.
Are yields now normal? This is a huge cultural question. Are we getting back to normal? Or do you see a vector towards lower yields?
So our expectation is for a normalizing monetary policy cycle, not an easing cycle. So on the front end policy rate, we are not expecting to retrace to the zero lower bound that was in place for much of the post-financial crisis era. At the long end of the curve, we expect structurally higher rates there as well because of an increase in term premium, focus on budget deficits.
Right.
So yes, I think we are in this high for longer interest rate environment. However, corporates have been navigating this. They've been refinancing into this new regime. They've been, taking actions to protect margins where they can to compensate for higher debt costs. So it hasn't been as disruptive as many market participants expected.
The next time you watch YouTube Premium, can you put it on 3 times speed?
I don't think actually that's an option,
videotape
Tom. I think actually the max is 2. So we're at max
Or
speed. Yes.
maybe you should slow it down.
Yes.
Amanda Lynam, thank you so much for your support through the year with BlackRock. Amanda Lynam, head of macro credit research, and always smart on where we're going. Are you and Jeff Rosenberg on speaking terms?
Of course, he's wonderful. Yes,
Yeah,
absolutely.
he's wonderful. That's good. He's up to 4 people at BlackRock that like him. It's
nice.
It's amazing.
BlackRock's they're over in Hudson Yards with the cool kids now.
Oh, really?
Yeah.
So like the shop, is it like painful because you want to shop?
It's beautiful, brand new. It's lovely. You should come over.
What's your favorite store there? Like, what's the unknown store?
Too many to choose, Tom.
The Peloton studio is there.
Yeah.
That's where I go.
That's right.
To the Peloton studio for live classes.
There's a lot to choose from.
So you're walking around in Lululemon tights.
No, that's not a good look.
No one. You think could you see me in Lululemon tights? Control room just turned green. Amanda Lynam, thank you so much for your support with BlackRock. Red and Green Industry Nasdaq with a lift up 0.4% off Dutch earnings success. The VIX under 17, 16.53. It's Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures, well, just trying to extend their recovery ahead of Microsoft, Meta, Tesla earnings, all due after the close today. We'll start with tech-heavy NASDAQ futures up 0.3%, 84 points. S&P futures, little changed, up a point. Dow futures, little change, down about 23. We have the 2-year yield at 4.19%, little change. The yield on the 10-year, 4.52%, and that is little change. On the economic calendar for today, just about under an hour from now, we'll get a read on wholesale inventories, but the attention really turns to the Fed later this afternoon. Our coverage begins at 1:30 Wall Street time. We have a few companies making news. Sources saying Apple's been secretly working with SpaceX and T-Mobile to add support for that Starlink network on its latest iPhone software. And then you have Bloomberg reporting Microsoft OpenAI investigating whether a group linked to DeepSeek got their data without authorization. And finally, shares of Alibaba, they're higher. Their ADR is up 3%. It launched a new AI model that it says is better than DeepSeek's V3 and Meta's Llama. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This is a great moment. We have an extinguished guest with us right now. If you go back a few years where Mr. Rukeyser had Carter Randall, a few other names on the show on a Friday night, if you're lucky, Philip Orlando darkened the door. Joining us now for the first time since the pandemic, Phil Orlando for Federated. Thrilled you're here. How'd you get through the pandemic as an investor? What was the number one Orlando attribute?
I guess just taking a deep breath and looking at the long-term picture, that we as a country, as an investor nation, have gotten through a number of crises over the decades. And America has always gotten through it. And so if you allowed yourself to take a deep breath and look at the things that we were doing and had the confidence that we were going to get through this and looked at across the valley at the other side of this, you recognize that we can have some pretty good returns. And certainly that's been the case over the last couple of years.
Phil, as I mentioned earlier, we've had great returns for the S&P 500 in 2023 and 2024. As you go out and talk to your Federated Hermes clients in the month of January in 2025, do you try to set expectations, or do you just kind of say, we're in it for the long term, we're still in this market?
Both. We do set longer-term expectations in that, stocks over time up and to the right, so you want to be in it to win it. But there's a lot of concern that, okay, we've just had two 20% plus years. Invariably or historically, you don't get, a third. And our point of view is, okay, given where we topped out last year at 6,100 on the S&P, we've actually got a 7,000 target for this year. Wow. So we think it's going to be a positive year. Not quite as good, mid to upper teens, but, as Larry Kudlow would say, we are expecting a lot of chop and volatility here at the beginning of the year. We think the market did get a little ahead of itself. So, truth be told, we'd love to see a move back to the 200-day moving average at about 5,600. If we were able to achieve that, we'd be pushing our chips in the middle of the table.
This is critical. This goes to the optimism within your note. Phil Orlando's notes, folks, are short, really crisp. He has a lift to economic growth. Kudlow at Bear Stearns years ago would have said you have to look at it on a nominal basis, because Steve Auth is looking at equities on a nominal basis. Your note tells me you see a sustained 4.8%, 5% plus nominal Larry Kudlow GDP.
That's exactly right. And maybe it's because those of us who are sitting around the table at Federated Hermes Macroeconomic Policy Committee, we're sort of trained as supply-siders as opposed to Keynesians. So we look at, what's going on right now in terms of the extension of the tax cuts, the reduction in regulations, the potential expansion of energy exploration and production. We look at that and say that's pretty good. We think on balance it's going to help drive the problems with inflation lower, keep GDP growth sustainably moving back to that 3% plus level. All of that longer term is good for stocks in our view.
So I think about the drivers of the marketplace. I've got a Federal Reserve that we'll hear from them today. Tom will have full coverage over this afternoon. Maybe one, maybe two cuts this year, but that's kind of it. So it feels like if there's going to be some movement in this market this year, it really has to be earnings driven.
It absolutely has to be earnings, and we're looking for roughly a 10 to 12% increase in earnings over the next couple of years. We're literally expecting nothing out of today's meeting.
Okay.
The Federal, we're not expecting our first cut until June. The Fed should do nothing in terms of interest rates. There's no SEP update today, so it's all going to be the presser, and will the Fed acknowledge that maybe it overreacted to the inflation data and the jobs data, last September when it gave us that supersized 50 basis point rate cut, but that's it.
One more cue. I love your phrase. For Republicans and Democrats and the unaffiliated, you write about Trump trepidation.
Yes.
How do we survive, all of us, Trump trepidation?
Well, the reality is that if you're a Democrat and you're apoplectic about what's just transpired and you decide you want to go to gold, canned goods, ammunition, and hang out in the bunker for 4 years, that's a mistake. Stocks, regardless of what parties are controlling the levers in Washington, up and to the right over time. So you want to be in it, you want to be invested, but you certainly want your allocation to reflect your needs and objectives and your risk tolerances, and that's where you sit down with your financial advisor and make those adjustments.
Can you come in more than once every 5 years?
If I'm invited, Tom, I'll be delighted to come in.
Lisa, can you just talk
He's
to Mr.
invited.
Orlando's people and
We'll talk to his people.
say
Happy to be back.
Do you got the NYU tie going today?
I just went with the rip. I didn't go with the NYU tie, but I do have the NYU colors on.
You're vamping it. It's good.
As a good NYU grad, I'm still partial to purple.
Half of global Wall Street, Tom, came from the Stern School of Business. I'm convinced.
It is good.
It's unbelievable. They're
Tania
everywhere.
once, I'm helping Tania with some math, and she's showing me the math notes from Stern.
Thank you.
I'm like, it looks like corn. It looks like Peter Carr over at the derivative school at NYU.
Yeah.
It's like serious stuff.
Too much.
It was more than multiplication.
Yes.
Phil Orlando, thank you so much.
Thank
for
you very
coming
much
in.
for having me
Thank you
back.
to all at Federated as well. Let's get right to it on this Fed Day. Our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Robert F. Kennedy Jr. faces confirmation hearings today as he aims to become the next Health and Human Services Secretary. Bloomberg's Amy Morris has a preview from Washington.
In prepared testimony for the Senate committee seen by Bloomberg News, Kennedy says he's neither anti-vaccine nor anti-industry, and he says all of his children are vaccinated. Back in 2023, though, he linked vaccines to autism, something scientists dispute.
Do you believe that autism does come from vaccines?
But today he says he believes vaccines should be left up to the parent, not mandated. His cousin, Caroline Kennedy, has a plea for senators, something her son posted on X.
I urge the Senate to reject his nomination.
RFK Jr. also changed his stance on abortion after former Vice President Mike Pence opposed his nomination. In Washington, Amy Morris, Bloomberg Radio.
To hear RFK's confirmation hearing, stay with Bloomberg. We'll have full coverage starting at 10 a.m. Wall Street time on Bloomberg Radio and on the Bloomberg podcast page on YouTube. A federal judge temporarily blocked a Donald Trump executive order that paused all federal grants and loans while the administration checks to make sure the federal funding does not include any progressive initiatives it does not like. Chaos ensued as governors, mayors, and community leaders and Americans were left in a state of limbo about federal funds earmarked by Congress that were now frozen. Minnesota Governor Tim Walz slammed the funding freeze.
Donald Trump's reckless action cut off funding to law enforcement, farmers, schools, child care, veterans, and health care. While he was out golfing, he threw the country into crisis.
Meanwhile, the Trump administration says it is offering at least 7 months of buyouts to all federal employees who opt to leave their jobs by next week. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. I never look at Facebook. I didn't know the symbol was Meta.
Yeah,
I didn't know that.
That's what happens.
Okay.
Yeah, pay attention.
From December 31st, It is popping the number's so big, a 4.7 standard deviation swing from almost -2 standard deviations. And right now, going out from 674 to 678, I'm popping 3 standard deviations up top.
Yeah, sure.
It's almost a 5 standard deviation move.
It's been a huge move, 15% this year, 70% over the trailing 12 months appreciation for the stock. It's been cost cutting. It's been backing away to some extent from the whole meta play. Now, they went that several years ago. They got into this whole meta universe, changed the symbol, changed all that kind of stuff, and the street didn't like it.
The symbol's meta?
Yes. It just,
I'm learning every day.
It's working despite all that.
Lisa, you got to tell me that when they change their symbols.
Sorry.
It's Fed Day. Bloomberg surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
It is the newspaper. It's a daily look at the front pages. The Lisa Mateo moment. It's brought to you by IBKR. Will the U.S. CPI statistic exceed 2.8% in January of this year? Trade your prediction with IBKR Forecast Trader. The yes was recently at 35%. Buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast on U.S. CPI for January. Thank you, Interactive Brokers, for that. Lisa, what do you have?
Okay, Tom, you're not going to like this one. I'm sorry. This is in the New York Times. National test scores showing that the reading skills of American students continuing to fall. Let me get to the numbers real quickly. The percentage of 8th graders who have below basic reading skills, it was the largest it's been in the exam's 3-decade history. That's 33%. It was 40% for 4th graders. There was some progress in math, but it didn't just offset those losses. But the interesting thing is the reason why the experts feel like this is happening. They're just saying the increased screen time, more kids on their phones, social media, school absences, all, those kind of distractions. They're watching more videos on their phone, so they're reading less. They're watching the video.
I'm in the same boat.
Yeah,
I mean,
all the time
I
on
read
the
less
phone.
than I used to.
Yeah, well, it's true. Adults too. No, it's true.
I see the books stacked up in Afterthoughts bedroom unread. And what I know is there's something about finishing a book. It's gone.
Yep.
It's
just
hard. I think it's the attention span, too.
I'm trying to do it by example. I'm reading Ruchir Sharma right now, folks. Fabulous book on capitalism. I'm reading David McCullough on Paris just because I need to buy 6,000 square feet on the River Seine. Blah, blah, blah. Paul, you're reading books. The answer is I'm trying by example to show them to go cover to cover. Yeah. It ain't working. I'm going down in flames.
It's hard, but that's what they're saying. Because the screen times are causing them to have less attention span, they can't sit and finish a book and finish reading what they're supposed to be reading.
It's a huge deal. I don't know what to do with it.
It's a big one.
I'm depressed.
No. Well,
Hold on. I got to go check TikTok.
Thanks. This was an interesting from the Wall Street Journal. New York City co-ops, not the status symbol that they used to be. It has this really interesting read into it. These are buildings that, symbolize this old money elegance, right? We're talking about Park Ave, Fifth Avenue, even Central Park West, all those co-ops, because they're saying younger buyers, they want newer, flashier buildings downtown. They want to go downtown. A lot of the co-op buildings, they're older, they're built in the 1920s, and then they're choosing, the condos have fewer rules because the co-ops have a lot more restrictions.
Have you ever done the co-op process?
I've not done the co-op process. I'm reading about it.
I applied to a co-op.
Did you get rejected?
A fancy one, like I would have been the poorest person in the building, and I was insulted by what they wanted from me. I said, no way.
And
I just walked
that's
away.
what a lot of people
They
don't want
wanted
to
my
deal with.
entire tax return. And that was a year where Vet Bill, had a business that went under, so it was like 54 pages. I said, I'm not doing that.
Yeah, they could order you to pay all cash.
It's also that they're new and slick and they're downtown. Mm-hmm. I mean, it's not just co-op condo, right? Squeeze in one more here.
Okay, one more. Oh, this one's a dinger. Punxsutawney Phil's Groundhog Day job could be in jeopardy, okay? PETA is suggesting a vegan weather reveal cake because I knew you would love this, because they want to retire him to a sanctuary. That's what they're asking. They're saying, Phil, he's exploited. He would be happier living in his natural habitat. So the blue would mean 6 more weeks of winter. The pink would mean an early spring. And that's how the vegan cake would work. Instead of Punxsutawney
This
Phil.
is disappointing. Can the president do something about this?
Yeah, can you step in here?
Groundhog Day Sunday, don't forget.
Is it Sunday?
It's Sunday.
Is it? Okay.
Okay.
That's why you get the story.
I think I know what this varmint's going to say.
Yeah, I've been there reporting from the Staten Island.
You've done it.
Oh, you did the Staten
The
Island.
local news
PIS.
section, you know that. I was there at the Staten Island.
Did you see one of our mayors have their hand bit?
I actually did.
You were there.
I was there for that one. That was quite a show.
Did he drop the beast?
Yeah, he did not.
No?
But he held it together. It was very impressive.
Yeah. Hold on to your badge, Lisa. Thank you so much. The newspapers with Lisa Mateo. I saw a video last night with David Crosby singing backup for a band a few years ago. Grace Slick is 85. The best ever Serialistic pillow.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
The president is focused on geopolitics.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. It is Fed Day. We're focused on that, but we're also focused on the markets. Coming up, Paul, I'm sorry, it's our conversation of the day on the equity markets, the courage to be in a market.
Yep.
We'll do that with Cam Dawson here in a moment.
In studio, again, the traffic jam in the green room here is Bloomberg Radio today's awesome.
Yeah, I mean, thank God Cam brought the smaller entourage.
Right.
Orlando's entourage was. He's got the guy with a mic hanging overhead and they're taping it. Like Al Franken used to do.
Yep.
Anyways, we say good morning. We're going to get to it quick because we want to hear every syllable from Cam Dawson today. Bloomberg Surveillance nationwide on your commute. It's brought to you by Cohn Resnick Advisory, Assurance Tax for 4 years straight. Hedgeweek is named Cohn Resnick Audit Firm of the Year. Let Cohn Resnick's financial services team, let them show you why. We thank Cohn Resnick for their support. Red and green on the screen. It's Fed Day. It's important. We'll be there at 1:30. Right now, from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, all about the Fed and also tech earnings today. After the bell, we're going to hear from Microsoft, Meta, and Tesla. Even can't forget IBM on top of that. Not much movement, though, in them before the bell. We'll keep you updated throughout the morning. NASDAQ futures up about 0.3%, 65 points. We have S&P futures. Right now, little change, down about 19. A turn to S&P futures, little change, down about a point. We have the two-year yield, 4.19%. That's little changed. And the yield on the 10-year, 4.52%, down 1 basis point. The Bloomberg Dollar Spot Index is little changed. More earnings. We'll get to T-Mobile. Their shares up 6%. Fourth quarter results beat expectations. That was thanks to a lot of growth in wireless subscribers, also home internet customers. The CEO will join us live at 11:15 a.m. Wall Street time, so be sure to tune in for that. Also, shares shares of Dutch chip-making machinery maker ASML. They're on the rise. Our ADR is now up 9%. Order bookings beat estimates. Big driver by AI. Taking a look at other chip stocks, we have AMD up about 1%. Broadcom, same there. Marvell Technology up 2%. NVIDIA, though, down about 1%. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. I appreciate it. Okay, here's the way it works, folks. The non-pros think it's about I'm long, I'm short, I buy, hold, sell. And what adults do in the business is they look at the nuance of the strategists, how they shift in their research notes. When I first came to Bloomberg, Paul, I'd explain that writing is more important than talking. And Cam Dawson at New Edge writes up a storm of clarity as well. So it's the nuances here. This is the conversation of the day on equities. Fading momentum, they opened for Starship years ago. What in God's name is fading momentum?
I thought they opened for Jefferson Airplane. Right. So fading momentum is that we're starting to see a little bit of the oomph of this market, this up and to the right, 20% each year trend start to fade out. And we measured that by looking at things like a weekly MACD, moving average convergence divergence, a lot of words, just to say that some of the momentum in the market has slowed. Is that a death knell for the rally? Absolutely not. But our base case for 25 is that the market does flatten out. We get this wider, choppy range as we move through the year.
We're going to have some earnings growth, aren't we? Because my Fed's not going to do much for me. I'm going to hear that today at 2 o'clock. I don't think we're going to get a lot from the Fed, so corporate America better come through. Is that kind of the thinking?
Well, the thing that has kept us in the market over the last 2 years has been earnings growth. Okay. If you look at the key reason why the market continues to rally, it's that 12-month forward earnings continue to move higher. So as long as that happens, it supports remaining bullish on equities. There's a caveat to that, though. There's been a booster in this market because of valuation expansion. Over the last 2 years, we've seen huge multiple expansion in addition to that earnings growth. And we're now hitting a ceiling on that multiple.
Okay, but does the denominator catch up? I mean, Louis Vuitton was out yesterday. I know you're the only one I know, Kim, was betting the new store at 57th and 5th. But the answer is the denominator. The hope here on free cash flow and earnings is the denominator catches up to bring that PE down. Is that the model?
Certainly, that's what we are expecting this year, is that we grow into this valuation, that earnings growth allows us to trade at a more reasonable valuation. But what that implies is that you get earnings growth as your total return, kind of at best for this market, meaning that another 20% year would require more
single digit?
Single digit, and that's not that bad. That's average. Now, we rarely get an average year, but we think that the healthiest thing for this market would be to have a lower return year because it would keep us from getting into bubble territory in those valuations.
What was your takeaway from Deep Seek Monday? That kind of shocked the market. We all had to get smart on this AI thing and some of our assumptions about AI. Did it change the way you view the market?
There's so many AI experts on X now.
Yep.
It's incredible.
Yes.
It's amazing.
Lisa Mateo, awesome.
That thread was incredible. Look, we do think that there's a couple takeaways from it. The first one is it shows how tightly wound some of these peripheral trades around AI were, the idea of energy and the infrastructure around it, that you had seen rallies of 20, 30, 40% year to date, and that they evaporated in an instant just showed you how they weren't necessarily based on anything fundamental. It was just the momentum of the narrative. The other thing that I think is important is that we were extrapolating today's power needs as well as today's computing needs forever into the future into some of these infrastructure providers. And I think we were underestimating the degree of innovation that would come out from these AI models that would suggest that those power needs and computing needs, that curve would start to flatten out.
How about investing equities outside of the U.S. here? How do you think about that?
We think that in order to make a long non-U.S. equity call that is with duration, meaning that it's sustained more than just a short snapback. We've seen a lot of head fake rallies over the last few years. In order to make that sustained call, you have to make a sustained dollar bearish call.
That's a tough one.
You cannot have a sustained rally in non-U.S. stocks without a weaker dollar. We've never seen it, and so we think that unless you have high conviction that the dollar is going to weaken significantly, you have to be dubious about the duration of these rallies.
On your commute this morning across the nation on Apple CarPlay, good morning, 99.1 FM Washington, 92.9 in Boston. On YouTube, subscribe to Bloomberg Podcast. Our marketing executive, Amanda Lynam of BlackRock, was with us earlier. She likes YouTube Premium. There's all sorts of advantages to it that I don't understand. In the 9 o'clock hour, Anurag Rana will be with us. Are you ready for this? In studio, which means Mandeep can't be in the building.
Oh, I understand.
It's like serious. Anurag Rana in from Chicago. That will be the AI somebody that actually knows what they're talking about. Help me with free cash flow. Apple's free cash flow makeup is different than Meta's free cash flow makeup. How do you utilize free cash flow in your confidence to own equities?
Well, let's remember that free cash flow is cash flow from operations minus CapEx. And so we have seen those people who have significantly increased CapEx see a little bit of a drag on their free cash flow generation. So Meta gets a drag because they're putting $1 gajillion into AI. And the difference, though, with Meta is that its cash flow from operations is growing rapidly because it's cutting expenses and it's seeing really strong revenue growth. Remember, Meta is 99% advertising. We're still in a world where economic growth is good. Advertising is a cyclical business. And so what's happening with Meta is that their CapEx is increasing, but their cash flow from operations is also going up, which is allowing them to continue to see good free cash flow margins.
Paul, get one more in here.
Fixed income, what do we do here? I mean, do you stick your 2-year treasury at 4 and change, or do you try to take some credit risk?
So we are not wanting to take incremental credit risk, mostly in the lower quality parts of the market. We simply don't think that you're being well compensated. It effectively gives you equity type of risk within portfolios, so it's not a good diversifier at these spreads, which just means that we're sticking a little bit closer to the short end of the curve and being very opportunistic when yields do pop higher, that we're adding to duration on those movements of pops higher in yields, whether it's because of inflation, growth, or fiscal concerns.
So is your guesstimate we survive this week in tech earnings, that we'll see a goodness there?
I think they're going to try to come out and be as bullish as possible and say and talk about the return on the investment of the CapEx that they're spending, try to underwrite those fears that they're not going to get that same kind of return because of DeepSeek. But the ball is definitely in their court to prove that they're spending their money prudently.
Are you going to spring training? I mean,
of course.
Do you have which field are you going to?
Okay, so my grandmother is the biggest Phillies fan in the world, and that might be offensive to this room, but we do spring training each year because she does love the Phillies, and we're going to go to a Phillies game in July or June.
Awesome, very good.
Okay. Your mother,
Great ballpark.
This is your grandmother?
My grandmother.
Your grandmother, she wears the Mike Schmidt jersey when she goes,
Back from the day.
And she has a lot of opinions about their bullpen. A lot of opinions.
Okay, get briefed up. Bring your grandmother next time. We'll talk to her.
We'll talk Phillies baseball.
Cam Dawson, thank you so much. This is an important interview, an important conversation as well. Wendy Schiller has never seen this before. Phil Orlando talked about Trump trepidation this morning. We can all agree, whatever our politics, the moment we're living in is original. Joining us now, Professor Schiller from Brown University. Wendy, when you look at the news flow of the Washington Post, the New York Times, when you watch Joe Matthew and Kayleigh Lines, how do you interpret, how do you digest the tick-by-tick Trumpian news flow?
Well, I mean, they are on a considered effort to, take apart the federal government, the federal infrastructure, bit by bit, in big sweeping ways and in small unseen ways, like in an effort that we have never seen before. And they want to rebuild it in a much smaller, leaner, less regulatory, less expensive way. And they, at the moment, meaning they, Trump and his advisors, are really determined to do that. On the other hand, this could just be a lot of theater leading up to the debt ceiling. In other words, the wing of the House that wants to make sure we keep federal government spending lower wants to cut $2.5 trillion from the budget. Look at the number that was frozen, $3 trillion. Looks a lot like the $2.5 trillion that they were pushing. This could be the beginning of the bargaining politics between President Trump and the very right wing of his party in the House.
But Wendy, in the 7th and coming 8th edition of the Contemporary Congress, one of your classic books, we've never been here before. Is it whatever anybody's politics, is it the judiciary to the rescue for pro-Trump or anti-Trump?
Well, the irony here is that the Supreme Court made two different decisions about the extent of bureaucratic power, the discretion of agencies to interpret congressional law, and that they wanted to grab more power back for the courts to really figure out what Congress intended and what the executive is doing. And now they have their wish. Now the courts will have to interpret all of this in the context of separation of powers. I wouldn't think to the rescue. I mean, government has to get more efficient. I think that's where Trump understands where the American people are. They may not understand everything they get from the federal government, but they don't think it works very well. And so it's a prime opportunity for the coincidence of the executive power being larger than ever before in American history, and the opportunity to really cut back on what the federal government does, because public opinion seems to be moving in that direction.
Wendy, there's a lot of noise coming out of there emanating from Washington, whether it's spending freezes or not spending freezes, and what did the administration mean or not mean, buyouts of people that don't want to come back to work. What do you think people really should be focusing on? What's the important stuff coming up?
The impact. In other words, what is actually theater and what is actually happening. You'll notice that yesterday the administration backtracked a little bit on what it was including in the freeze, including what we used to call food stamps or SNAP, which you have to refill to all automatic debit cards on, Saturday. If you freeze government spending and don't refill it, people don't get to eat. So, I mean, these are things that have real impact on real people's lives. We haven't seen it yet. And so that's why the Democrats are getting hit for not screaming and jumping up and down. But you can't persuade the public that there's danger if no impact is felt. So I want to look at what's actually going to stop and what's actually going to affect individual lives, because that's what will move the ground underneath the feet of Republicans in Congress, not just Democrats. And they're going to have to reassert the power of Congress. And that's been eroding for more than 20 years. That's going to be a big lift.
Wendy, we had Pete Hegseth get approved by the Senate for his cabinet position. What are the next, important ones coming up here?
Well, certainly Robert F. Kennedy Jr. and also Tulsi Gabbard. Again, Trump is also using the power of the executive to threaten Congress, and particularly the Senate. Look, get my people through. I want everybody that I picked. Make sure you get them through OMB director. That's tomorrow. Lindsey Graham says, well, we're probably going to clear him, even though OMB is just frozen, theoretically, $3 trillion. Obviously it would crash the economy in a day. I mean, you can't do it. Right. So I think that's what this is. So that's what I'm looking at. What does Trump actually want in terms of claiming victory? And what is he using to get what he wants from Congress?
And now, the Schiller audible, as they say. Amy Walter over at Cook writes up the Michigan Senate race. Senator Peters will retire. The confusion here, Wendy, is that Governor Whitmer is term limited. She has to leave the governor's office. Help us with that, Wendy. Does Wendy Schiller believe that term limits is a successful policy?
I don't believe in term limits, actually, and I'm probably going to get a lot of feedback for that. I don't, because it takes away the electoral incentive. We look at the President of the United States. They are theoretically a lame duck the minute they start their second term. That's a dangerous thing when an individual has that much power. You can say we don't want people in office forever. Chuck Grassley, I believe, turns 92 from Iowa. There are no term limits in the Senate. So people say that's a horrible thing. I don't agree. I think in the end of the day, it decreases the incentive to respond to your constituents in a responsible way. And that's why I don't like them.
Are we going to get a percolation of a Trump third term?
I thought, Tom, I think I've said this before speaking with you and Paul. I thought he was filing to run for re-election the day after inauguration. I literally thought that he would do that. Why? Because he can raise money doing that. And then the FEC can't say no, because Trump will say, I can repeal the 22nd Amendment. I'll get the votes. I'll get the states. He needs 38 states to do that. But the point is, I was expecting that sooner, and I'm still expecting it because
Right.
if he thinks his influence is waning, he will do that to show that he's not going anywhere. He'll be 82 years old running for re-election.
Wendy?
So there's more to come.
I remember cocktail parties when I was 7 and 8 years old, and after the third Cuddy Sark scotch, the room started debating FDR in 3 terms. That's, this is in the early 60s. Wendy Schiller, thank you so much. What a clinic. Wow. Wendy Schiller with Brown University, whatever your politics. Thought-provoking. Speaking of thought-provoking, on Fed Day, the news with Michael Barr.
Thank you very much, Tom, Paul, Lisa. Robert F. Kennedy Jr. faces a confirmation hearing today as he hopes to become the next Secretary of Health and Human Services. Now a member of his family is speaking out against him, releasing emails in which he discussed vaccines. Kennedy's cousin, Caroline, called him a predator.
Bobby preys on the desperation of parents of sick children, vaccinating his own kids while building a following, hypocritically discouraging other parents from vaccinating theirs.
Full coverage of RFK's confirmation hearing starts at 10 a.m. Wall Street time on Bloomberg Radio and on the Bloomberg podcast page on YouTube. The Trump administration's effort to stop federal payments until they ensure they comply with President Trump's orders to bar diversity programs was temporarily blocked by a federal judge. Yesterday's move caused panic because it is not known what programs would lose access to their funding. George Benjamin heads the American Public Health Association.
We believe that the federal government does not have the authority to do this and that what they did was illegal, and we're hoping the courts see it our way. If they don't, people will die. People will lose services. There will be utter chaos in the country.
Meanwhile, the Trump administration says it is offering buyouts with 7 months' pay to all federal employees who opt to leave their jobs by next week. It is an unprecedented move to shrink the U.S. government. President Trump will sign the Laken Riley Act into law today. The House passed the legislation a week ago named for a 22-year-old nursing student in Georgia who was murdered by an undocumented immigrant. The bill expands the federal government's mandate to detain undocumented immigrants. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
It's Paul Sweeney's fault. You were in the meeting in 2004 when they decided to make permanent the 2-week delay to the Super Bowl.
Yeah, exactly.
Why are we doing this in this day of light-speed media?
Because you can just build so much media content in this 2 weeks that ESPN's going wall to wall, and all the sports networks are going wall to wall on the Super Bowl.
But do
stories.
they lose the big non-ESPN audience like me?
No. Watch, they'll have more than 100 million people on Super Bowl watching this thing.
100 million.
Yeah, 100, way more than 100 million. And so it's as bigger than it's ever been. And so why not milk it as long as you can? And that's what they're doing. So, and by the way, in the next year or two, and Ari can correct me, there's going to be another game added to the NFL season.
No,
Week
Ari,
18.
is that true?
Yes, it is.
Did I just see a Charlie Pellet sighting? We got to get him in here later. Charlie, Charlie, we got to talk to Charlie about Europe on $5 a day.
Sure.
Michael Barr in Detroit, Chiefs or Eagles?
Boy, I got to go with the Chiefs. I hate to say it.
You're killing me.
I'm sure the people in Philly are like, egg them, but they have the slight odds.
Okay.
Yeah. So 1.5 points, I think, for the Chiefs.
I'm blown away by 57 million.
And who's the halftime show? I don't know who they have.
Kendrick Lamar.
Yeah.
Kendrick
Okay.
Lamar.
Kendrick. Lisa's.
Tom's fired up about that.
Yeah, fired up about that. Oh, you laugh, Bob. Bloomberg, good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimal financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got a little bit of a shift. We've got red across the screen right now. This is after that rough start to the week. Worries over that cheap AI model from Chinese startup DeepSeek. Now we have the tension turning to big tech earnings. Microsoft, Meta, Tesla. Also, that interest rate decision by the Fed. Policymakers are expected to hold those borrowing costs steady. We'll see later this afternoon. So we'll start with S&P futures. They're down 0.2%, 13 points. Dow futures down about 0.1%, 65 points. NASDAQ futures are a little changed. They're down about 3 points. We'll head over to the 2-year yield, 4.19%, little change. The yield on the 10-year, 4.52%, and that is little changed. Over to commodities. Brent crude down about 0.5%, $77 a barrel. WTI crude, $73 a barrel, and the Bloomberg Dollar Spot Index up about 0.1%. The luxury market taking a bit of a hit this morning. You have Louis Vuitton owner LVMH down 5% in Paris. Disappointing sales. If you remember earlier this month, Burberry, Richemont beat sales expectations, so a bit of a difference here. Then we go to Starbucks. Their shares up more than 3%. Better than expected quarterly results. The company says their marketing efforts helped, and also removing the charges for non-dairy milk. That also helped. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
Pause listening to her. She's like awesome.
I know. She knows what she's doing.
She slides in at 6:55.
Yep.
And she just nails the earnings.
The big car pulls up and drops off.
Well, that's because she's on the Mount Rushmore of WPIX.
Yes.
X11. Lisa, that
Does
was
that mean
brilliant.
that I'm old? What does that mean?
No.
Yeah.
Jefferson wasn't old when he went on Mount Rushmore. Lisa Mateo killing it on earnings, and of course, a lot to go into here. Meta and Microsoft tonight. Look to Carol Massar and the team there, Tim Stemenik and all here tonight on Meta, Facebook. Thank God Microsoft's just Microsoft.
Yeah.
Nothing else. This is really important. You need a degree in physics to cover Washington. Tobin Marcus is outstanding at Wolf Research. He has a granularity of government analysis like nobody. It's like Dan Clifton over at Strategist on steroids. Tobin Marcus joins us from Wolf Research right now. In your Excel spreadsheet of the money coming into our government, and Tobin, the money coming out, the spending, what's the key line item that we should focus on in terms of our fiscal future?
So look, obviously the biggest items are the entitlement programs, Social Security, Medicare, and Medicaid. In terms of what realistically is in play over the course of the next few years, Trump's been very, very clear that Social Security and Medicare are programs he doesn't want to touch. And so we've been saying, since last year, and I think now folks have been coming around to it since the election, that Medicaid really is in play this year. I think when you look at any of these spending cut targets, whether it's the $2 trillion DOGE idea or the $2.5 trillion that Mike Johnson promised to House Republicans in December, there's really no way of getting close to that without going after Medicaid.
Do we need a Social Security Commission? They always go down in flames, but maybe Trump can get on Mount Rushmore. The president can get on Mount Rushmore by coming up with a Social Security solution. Is that in the cards?
It's certainly not on the cards anytime soon. I mean, my thinking about this has been that the pending insolvency of the Social Security and Medicare Part A trust funds is going to be the most likely forcing event for people to finally kind of hold hands and jump on this. There was a time when that was supposed to be in the next few years, but that's now been pushed out to the early 2030s. So probably a problem for another president. I mean, the unfortunate reality is that there is so little trust between parties that it's really hard to see how you could get the political environment for people to kind of hold hands and do the mutually challenging thing that's sure to be unpopular. I think it's part of Trump's original political genius in 2016 to have said, unlike Mitt Romney, unlike George W. Bush, unlike Paul Ryan, I will not be trying to cut Social Security and Medicare. I think he realizes that's helped him.
So, Tobin, realistically, given the very tight House differentials between Democrats and Republicans, what, in fact, can the president and this Congress get done?
So, if they hold together, they can do some very big things through the reconciliation process. A majority is a majority, no matter how thin it is.
Yep.
The question is whether they can hold together. And my guess is that they're going to because they have to. I think failing on this tax bill they're trying to put together is going to be seen as so unacceptable and such a huge problem that they'll come together on something despite all the tough challenges.
Okay, Wendy Schiller was just on from a school up in Providence. I don't know if you're familiar with it, Tobin. But
I had Professor Schiller in 2007.
You had her was she a tough grader? I mean, was she giving out quality C's, or was it everybody got an A?
I'd say tough but fair. Tough but fair.
Tough but
There you
fair.
go.
It's like Lisa.
Yeah,
same
tough
thing.
but fair.
Okay, Tobin, she mentioned the tax bill. We were all lathered up about 14 headlines in the Washington Post or Balance. I mean, Balance of Power is like a 4-hour show today, right?
Gotta be.
Okay, so Tobin, what's the debt deficit tax bill timeline here?
Yeah, so there's sort of two big steps in putting this bill together. First, they have to pass what's called reconciliation instructions as part of a budget resolution. With apologies to your listeners in advance for boring everyone with congressional minutia. And then that unlocks the ability to pass the actual bill later on. Speaker Johnson is talking about getting reconciliations adopted in February. I'm skeptical if that's going to happen, particularly since they seem to have made very little progress at their retreat this week. So, I have that penciled for April, kind of getting the framework in place, and then passage of the final bill in Q3. But it could easily slip longer than that.
Where are the areas, Tobin, that you think significant cuts in spending or noticeable cuts in spending will have to be made to fund these extension of the tax cuts?
Yeah, so I think the big items in terms of pay-fors and offsets in this bill, one is Medicaid. Again, I would guess that we get something like $500 billion in savings from Medicaid. There's been talk about getting $2 trillion in savings from Medicaid, probably more than the market can bear, but one way or another, that's clearly a target. The other big one that's been a huge debate for markets is partially rolling back the IRA tax credits. It's clear they're not going to do an immediate cliff in 2026 and kind of root and branch repeal across all the programs. But I think it's also clear over time that they're going to be wanting to get savings out of this. Sort of when you're in 2030, 31, 32, 33, that's kind of free money to go after. And then beyond that, student loans, food stamps, I think there's a lot of smaller mandatory programs they'll be trying to.
I don't have time for the question, but you got to come back and talk to us about student loans. That came up at the dining room table last night. Tobin, thank you so much. Tobin Marcus, Wolf Research. Too short a visit. Let's do it longer next time. We need to get Tobin in studio with Professor Schiller.
Yeah. Student and professor.
That's very cool. Nice. I like that. That's very, very cool. It is Fed Day, and all of our economics is supported always by IBKR. Will the average U.S. temperature in January 2025 be greater than 34 degrees? Trade your prediction with IBKR Forecast Trader. The yes was recently a paltry 14%. Buy yes or no and enter $1 if you're right. Go to ibkr.com/forecast. Okay, Paul, we got to talk about Microsoft. They're coming out with their earnings. There's all these distractions to what used to be the main event. And I'm just sorry. It's like J.P. Morgan. Do we understand it's $3.3 gazillion market cap? They're popping $300 billion revenue. The margins. The EBITDA. Bring it down to the EBITDA. They're making 50 cents on the dollar.
Crazy. Unbelievable EBITDA margins. They're going to have free cash flow, probably $68 to $70 billion this year in 2025. 2026, the street's looking for $90 billion of free cash flow.
228,000 employees.
Yep.
And we're going mental about AI or this or that or the other. I'm fascinated to see what they show this afternoon.
Exactly. I'm looking at the stock. It's underperformed, the big peers, though. It's up 6% year to date, so beating the market.
Back
but
to
on
the
a
last couple
trailing
days.
12 months, up only 9%, versus a 20-plus return for the S&P 500. So people trying to get a sense of what's the next growth driver. We've, the cloud story, one could argue, has been played out. Now the question is, what is the AI angle for Microsoft?
And Anurag Rana with us here in the next hour. Maybe he can.
I've heard of him. He's pretty good.
On the cloud and all.
Yep.
35 multiple-ish.
Yeah. Why not?
Cam Dawson says they're going to grow their way in the denominator into a lower.
Well, we've seen NVIDIA grow its way into its multiple. You just take a look at those numbers.
I'm glad you bring that up because Microsoft's 228,000 employees. Did you know, folks, that NVIDIA is 29,000? It's 1/10 the number of employees. Maybe 1/9.
Yep.
1/10. I don't think people know that.
All right.
I don't know that.
Hey, here's an interesting headline. Just randomly, Tom, coming across the Bloomberg Terminal, red headline. Trump Media to expand into financial services with Schwab. How about that? Didn't see that coming.
No, I didn't.
No. So Trump Media and Schwab, I mean,
all I can think is what's it mean for Liz Ann Saunders?
Trump Media stock up, pre-market up 13%. So we'll have more reporting on that coming up. But
Trump
again,
Media to expand into financial services with Schwab.
I mean, Schwab is, obviously the king of retail investors out there, have been for decades.
Lisa,
as well.
can you pour me another mimosa? The news flow is just killing me. It's killing me.
We're on top of it.
It's just can we
Thank
do the
you,
newspaper
Rich
segment a second time? Stay with us on YouTube. Subscribe to Bloomberg Podcast. It's Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures, trying to extend that recovery ahead of Microsoft, Meta, Tesla earnings, all due after the close. But it's been a struggle this morning. Dow futures down 0.1%, 76 points. S&P futures down 0.2%, 14 points. NASDAQ futures down about 6. We have the 2-year yield at 4.18%, down 1 basis point. The yield on the 10-year, 4.152%, and that's down 1 basis point. We have shares of truck maker Volvo. They're up 6% in Germany. Its CEO said there are, quote, early signs of increased activity from retail customers. That's why their shares are higher. And then we have some news out of the airline industry. Spirit Air could be getting a lifeline. The parent of Frontier Airlines, it made a new offer to combine with bankrupt Spirit after talks fell apart last year. And finally, we have shares of DJT of 14%. There's word that Trump Media's board of directors, they approved a financial technology strategy. It's going to include the launch of financial services, also fintech brand called Truth FI, but there's a lot more to this story to really dig into. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. George Azar just out as this breaks here about Trump Media and the Charles Schwab franchise. And the key sentence to me, Paul, is $250 million to be custodied by Charles Schwab, which means simply they're the ones that are going to count the beans every day.
Yeah, I see two things happening here just from the Bloomberg reporting. Trump Media and Technology Group Board of Directors has approved a financial services and financial technology strategy, which will include the launch of the financial services and fintech brand Truth.fi. That's number one. Number two, to diversify the company's cash and cash equivalent reserves of over $700 million as of December 31, 2024, the board has approved the investment of as much as $250 to be custodied by Charles Schwab, as you mentioned, Tom. So it looks like we got two things going on there with Trump Media and Schwab.
Yeah, we'll get more reporting on this, but I see it as a custody agreement with Charles Schwab. And again, we need to see more from George Azar and the rest of our Bloomberg financial team. It is Fed Day with many distractions. I thought the Microsoft and NVIDIA thing there we just did was interesting. Cam Dawson was lights out. Many other guests today. But we need to get back to the foundation of American macro strategy. George Goncalves joins us right now from MUFG on this Fed Day. Where are we going to be at 4 o'clock, George? And I don't mean like trying to guess the press conference, but if it's a snooze fest, I don't buy it. What will you listen to for excitement in the press conference today?
Hi, good morning. And look, I do think that as much as we tend to think of Fed events as these potential market moving days, and they usually are, I think this is one where it's the first meeting of the year. It's the first meeting under the new Trump administration 2.0 world that we're in. And I really don't see why Chair Powell would want to convey anything that ruffles any feathers. And I really do think that they're going to just stick to the script around data dependency, and that they've largely achieved a lot of their goals, but this is going to be the first meeting, by the way, they're going to skip in the normalization process. They cut 100 basis points last year. This will be the first skip. So I think it's going to be about explaining what is the game plan for the coming months.
Will there be any language to suggest that they are not committed to further rate cuts, data dependent, of course? Will there be any language to suggest, hey, maybe there's scenarios where we sit pat or maybe even raise rates?
Yeah, look, we're leaning towards a very neutral message out of Chair Powell, and just from the general statement as well. I think it's too early to make that call. That would be a surprise, definitely, if they come across as that the normalization process is a done deal, and it's going to take and the bar has been raised. I think that they don't want to limit themselves so early on in the year, and so I don't think that's the case.
So where do we think about just kind of macro strategy here, given that backdrop, George, as we think about stocks, bonds, commodities? What's the macro call from you guys in the beginning part of 2025?
Look, I mean, I think it's a wait and see, staying very tactical, not really super strategic at this point. It's really trying to understand what is the lay of the land going forward, and there's a lot of jump risk, there's a lot of uncertainty, and we're still kind of going through it. So I think it's. Yeah.
I mean, George, I'll go with that. You're going to grab the coupon and wait and see. But what do you do down with short-term paper? Our listeners and viewers in cash in 3 months, they got the Sweeney 2-year CD, whatever. I mean, at that short duration, you can take the coupon, but you got to make a call here. What does short duration do?
Look, I think that fixed income still on the buy and dips makes a lot of sense. We had that rise in rates. It was unsustained. And as long as that's the case, I think that we're okay with buying on dips. But the problem is that we don't have a dip right now. We're actually at the bottom of the ranges. And I think we would want to look for either if data gets stronger in Q1, if there are those animal spirits, the euphoria post-election, if they translate into activity, then rates are going to go back up again. And then that might be a chance to buy.
So, George, where's your asset allocation these days? I mean, and has it changed in the recent period?
So look, we've been more defensive. I mean, credit, I think, is basically priced in all the good news. You're kind of neutral on credit. Mortgages are probably still the one fixed income asset class that has the most value, but it's at the mercy of rate volatility in the shape of the yield curve. Until we get more clarity on that, mortgages are a good product to buy, but really not the real time to do it at this point. And so we're relatively defensive and looking for yield.
George, we'll talk to you at 4 p.m., see if the world's blown up. George Goncalves with us, head of U.S. macro strategy, MUFG. I just don't buy it's a snooze fest. All my radars up this afternoon.
Yeah, feels like, okay.
We're going to be sitting there, and, Lisa's going to be on the phone with her kids, and, we'll just have to see.
The risk, Tom, I think could be that he has just in response to a question, perhaps, kind of just introduces the concept of there are data scenarios where maybe rate increases are on the table in 2025.
That would be huge.
That would be huge.
That would be huge.
So I suspect he wants to avoid doing that.
I'm not going to parley on that, but I agree. That could be the debate that moves the market. Futures deteriorate, -16. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The White House offered federal workers buyouts last night for those who did not want to end their remote arrangements, while warning employees the new administration planned additional aggressive cuts to the federal workforce. We get more with Bloomberg's Kevin Whitelaw.
He is looking to essentially get rid of a number of federal employees that he sees are an obstacle to enacting his agenda. Federal government workers obviously say that they're applying the law. They work they're nonpartisan. They work for whichever party. That's the entire ethos of the federal bureaucracy. But that's definitely not the way Donald Trump sees it. So the buyout offer is very much an effort to just say, well, here's one way out.
Bloomberg's Kevin Whitelaw. An email from the Office of Personnel Management says the payments will run through September 30th as long as workers resign by a week from tomorrow. A federal judge has temporarily blocked the Trump administration's order that would freeze billions of dollars in federal funding for grants, loans, and assistance programs. Confusion prompting the White House to clarify that the freeze is temporary and does not apply to federal benefits going directly to individuals. A concerning report card is out for American students. The National Assessment of Education Progress shows average reading scores for 8th and 4th graders are down 5 points. And in math, 4th graders are down 3%. 8th graders sliding 8%. Christina Grant of the Harvard Center for Education Policy and Research says the report is a call to action.
I don't think this is a season of us giving up hope. It's a season of us coming together in community, in our learning communities, to make sure that our students are making progress.
And the report also shows 12% of 8th graders reported missing at least 5 days of school per month. Lunar New Year festivals and prayers are marking the start of the year of the snake around Asia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Tom Paul Lisa.
We take an interlude here with Paul Sweeney. And just look, I'm looking at Box Office Mojo.
Yeah.
I don't know why anybody would finance a live, like, real people movie. Inside Out, Moana, Despicable, Mufasa, and I loved Kung Fu Panda 4.
Sure. Who
The
didn't?
answer is they're killing live action.
Kids.
Is animation is it?
Yeah, I mean, it's obviously it's been a huge genre. You think about it, and all the studios are in on animation, and they get big stars to voice these things, and they do generally really well.
Is Inside Out,
and they're global.
Is Inside Out 2 like Best Picture worthy for the Oscars?
I don't know. Please. What is it? The Brutalist? I mean, another movie I haven't seen.
I just looking at. I'm sorry, folks. I mean, this is, you know. I mean, Bar's kids they're watching Despicable Me 12 and all that. But
yeah, animation.
It's animation. It's like ginormous.
Yeah, DreamWorks was a company built on animation. So just amazing.
Wow. I mean, add it up. We'll get Lucas Shaw to talk about that at some point here. Wonderful work for Screen Shot here at great newsletter on Hollywood. On Fed Day, futures at negative 15 from New York, Bloomberg surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. On Fed Day, 1:30, we'll start in on the coverage there of the comments, the statement, and then, of course, the press conference will be absolutely key. Got someone, Bob Michael, I think, scheduled to be with us with JP Morgan. Darkening the door right now, the studio, Tracy Alloway with Odd Lots, which has just been hugely successful with just fabulous global distribution. And I want to just distill it down to Howard Marks. And he wrote a tome here. This is back 6-7 years at least. The most important thing that everybody was required to read. Howard Marks is legendary. Let's begin with why. Why is Howard Marks worth listening to on odd lots?
Well, Howard Marks plays in the distressed credit space, as you know, which means he has an uncanny ability to spot when things are about to go wrong. And he told us the story of how he operated during the subprime crisis. And he didn't know that much about subprime, actually, but he could tell that things were getting a little wild. And so what he did was he started raising money from clients, billions and billions of dollars in dry powder that he ended up having to hold on to for many years until things went bad. But when they did, he came in and bought a bunch of stuff on the cheap. So he's a useful guy to listen to about when things might turn the corner.
Any parallels with the dot-com bubble with today?
Yeah, so this is the other thing that Howard correctly called. He's not an equity guy, but he put out this famous memo, like right at the peak of the tech bubble in 2000, early 2000, called bubble.com. And he basically said, hey, this looks like a big bubble. And then most recently, he put out a memo that was called On Bubble Watch, where he's kind of calling back to his earlier memo, discussing parallels between the market now and the dot-com bubble. Interestingly, he doesn't see that we're in a bubble right now. He sees lots of signs of froth, but not the kind of irrational, crazy behavior that marks the 2000s.
The Howard Marks humility is centered on, and this is a chapter in the book, appreciating the role of luck. I can't emphasize enough how much I agree with that. How has he been lucky?
So one of the best stories I ever heard at Milken, and maybe that's not saying very much, but it was Howard Marks and Mike Milken on stage reminiscing about the olden days, the 1970s. And they were talking about how their careers basically started as a result of the Nifty 50 bubble bursting. Because if you think about it, in the 1960s, everyone bought these blue chip stocks. They were told to buy the best companies. Everything would be fine. But then you had the bubble burst. People lost a ton of money. And so that kind of gave rise to the money management industry, and in particular high yield, because the idea was, well, if you can't make money buying the best quality assets, maybe you can make money buying bad assets, but at a good price. So he got pretty lucky there. He kind of owes his career to the bursting of a stock market bubble.
How do you and Joe approach this DeepSeek story of this week?
Yeah, so I'm glad to say we were pretty early on it. Joe especially, he declared himself a DeepSeek AI bro.
He's at home.
Last week.
The marriage is threatened. He's at home doing AI.
He's in the office doing AI. He's also a Jevons paradox bro now too.
Okay.
There seem to be lots of those coming out of the woodwork, and this is the idea that, you know, if technology gets more efficient, people tend to use it more, and so it's not necessarily a massive threat if DeepSeek comes out and says it can train models or do inference at lower cost, because in the end it'll lead to the technology being adopted more and more, demand for GPUs and so on.
Tracy, thank you.
Good stuff.
I wish you could go longer. This is great. Odd lots. Now there's a concert tonight?
There
Light
is.
Sweet Crude?
There is. You should come, Tom.
Do you sit back with the sound guy? You know, sit next
No,
to
I
the
get to
desk?
sit in the audience. Also, I have a scoop for you. I heard there's going to be a debut of at least one new song.
Okay.
Yeah. Maybe that'll entice you all to come out.
Great.
Yeah.
Don't tell me it's called DeepSeek.
I feel like Joe's music manager,
Yeah,
his tour manager.
You're the A&I
Yeah,
person,
that's right.
A&R person.
Tracy
I'll just say
Alloway,
A&R.
thank you so much. This is one of those iconic songs you love or hate. Did you know that Bernie Taupin of Elton John fame is the one that got this started with Peter Wolf? They were writing about the LA bar scene, and the song went up, up, up. More Grace Slick, Marty Balin, more Starship.
Thank you, guys.
Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Fed Day. We hope you're with us this morning. Very interesting. We're going to have a really important talk here in moments with Ira Jersey, linking in really the sophisticated short market, which is what he does for Bloomberg Intelligence, into what we're going to see, the festivities this afternoon. Let's get right to it. Bloomberg Surveillance, and we're brought to you by BAM Mutual. They insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. How was the breakfast at bambonds.com?
Oh, they took care of us down there. Build America Mutual, yeah, sir.
What did you learn about tax-free bonds down there? Seriously.
Well, it's interesting. The discussion of the tax deductibility of municipal interest, it's a thing. It's on the table for discussion.
No, like triple, fourple tax-free?
Yeah, exactly. Now, I think the consensus is we're not too concerned, but it is definitely on the table as the government seeks to raise revenue.
Running green on the screen right now on the Fed Day. That's got that quiet Fed feel, even with Meta and Microsoft out this afternoon. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got the Fed and tech earnings taking center stage today. After the bell, we're going to hear from Microsoft, Meta, Tesla, even IBM. If we check in right now, so we have Microsoft down about 0.1%. We have Meta up about 0.5%, and Tesla right now down about 0.5%, and also IBM up about 0.3%. Now, this comes ahead of the tech earnings. We have futures. We're mixed. We have Nasdaq futures up 0.1%, 24 points, but S&P futures down 0.1%, 11 points. Slow down, Lisa. Dow futures down 0.1% or 60 points. 2-year yield 4.18%. Little change. The yield on the 10-year, 4.51%, and that's down 1 basis point. We have the Bloomberg Dollar Spot Index down about 0.2%. We're also tracking shares of DJT. This is after Trump Media and Technology announced it's expanding into financial services. Their shares up 13%. And then you have shares of Dutch chip-making machinery maker ASML on the rise. ADR is up 5%. Its order bookings beat estimates. Taking a look at chip stocks, we have Applied Materials up 2%, AMD up 1%, but NVIDIA down 2%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We want to report all are safe. Amy Morris was going across a bridge, the Potomac, down there with 99.1 FM. She built the city and almost drove into the Potomac.
Not a fan, I guess.
People love or hate the song.
Yeah, that's right.
Bernie Taupin of Elton John fame wrote the song. I don't think anybody...
So that's solid.
Solid, yeah. Cashflow loved it. He was 2 years
Jefferson
old.
Airplane to Jefferson Starship to Starship.
Yeah, I can't convey the importance of Serialistic Pillow. Jefferson Airplane with Somebody to Love and White Rabbit on it. That album defined a period like nothing else. Okay, this is really important. Farrell called me up last night. He says, you got to do this with Ira.
Halfback passes to the center. Back to the wing. Back to the center. Center holds it. Holds it. Holds it.
Halfback passes to center. Back to wing. Back to center. Center holds it. Holds it.
There we go. It's required. What you need to know is Celtic beat the Young Boys. I'm lost. It's different than Premier League. And Aston Villa plays Celtic today?
Correct.
Have they played since Queen Victoria?
That's a good question. I don't know when the last time that Villa played them.
Explain what is going on.
Well, it's the Champions League. It's the Champions League. Final round.
What's the Champions League?
So it's the best club teams
fact
in
that
Europe.
I have to ask this question 20 years after English soccer or European soccer has come to this country. Tells you we got a problem.
So the Champions League, the European Champions League, is probably the best soccer you'll see because it's the best teams in Europe, and like it used to be, like back in the 60s and 70s when Pele was playing and Maradona, it was the national teams were the best teams, but that's not the case anymore because Man City and all these Premier League teams can just buy the best players.
To a player, to Salah of Liverpool, is winning Champions League bigger than winning the Premier League?
Yes, absolutely. Yeah.
Really? I don't believe it.
Yeah, it 100% is.
Why is NBC or CBS or whatever not carrying
if you
Celtic, Aston Villa?
Well, because it's Celtic and Villa, it's not Liverpool and whoever, right, or Manchester City and whoever.
Celtic an Irish club?
It is.
Thank you. All right.
No,
Celtic.
I would have asked the same question.
All right, so I'm rooting for Celtic for my boys.
Is that true? They're Scottish, right?
Are they Scottish? It's Scottish? Okay.
Are the owners afraid that the two big stars of Aston Villa will be hurt messing around in Champions League versus the dash in Premier League?
No, not at this point, because you need to make the knockout rounds. There's a lot of money in the Champions League. There's a lot of money, right? So that's advancing in the Champions League is incrementally more money, and coming in the difference between 6th and 7th in the Premier League doesn't mean very much.
Will this come up in the Fed press conference today?
Probably not.
Okay. What are we going to hear in a press conference,
What we're listening for are two things. So one has to do with the balance sheet, has to do with quantitative tightening. At some point in the next 6 months, we think that the Federal Reserve will end its runoff of its balance sheet for some very wonky reasons. There's a lot of liquidity issues that could be coming around, but when you look at some of the Fed emergency facilities, they're nearly completely drained, like the reverse repo facility. So any hints that they're going to end that program in the near term will be number one.
The stereotype is Nouriel Roubini, QE1, QE2, with that accent, QE1, QE2, QE3. How far QE have we pulled back?
Well, quite a lot. The balance sheet has fallen $2 trillion, right? Even though it's still historically very large, and it's still larger than it was in 2019, we've still pulled back quite a lot, almost 20% from the peak of the size of the balance sheet. So it's come down a lot. But there's new regulations and other things that have to do with the financial system and the financial regulatory requirements that financial institutions have is really a driver of how the funding market, CP, repo, all of the wonky stuff that you might talk to someone like me about over a couple of drinks is really what's so important to the market. And the Fed is going to be worried very soon that that's going to kind of break if they don't stop quantitative tightening.
WIRP, go work.
Oh, listen to you and you.
All I know here is
you learned all this from Jess Menton, right?
Well, no, Lisa Abramowitz, she's to blame. She taught me all this rate stuff. 2 rate cuts for this year seems to be what the market's pricing in. Do you expect that to change after today?
I think it could. My feeling is that the Fed's not going to do what is priced into the market, right? The market basically says, oh, the Fed's going to cut sometime over the next 4 months and then once again the second half of the year. That's probably not happening.
Then why do we have the warp function?
Well,
I depend upon this thing.
Well, that's what the market's price, right? What the market's priced and what the Fed actually does is two different things, right? You go back to certain times that the Fed's, been talking about whether or not they're going to cut. I suspect that they might cut again in March, and then be done. And when you look at preponderance of the incoming data, it wouldn't surprise us at all if that was the case. And in fact, there's the real possibility Fed could be hiking next year.
All right, that's where I wanted to go. When do you expect, if at all, the Fed, in commentary, response to Michael McKee's questions, to even introduce that as an option? Because we haven't heard that yet, have we?
No, not directly, and certainly when you look at the dot plot, right, that comes out, the summary of economic projections, and we don't get that today, by the way. We'll get the next one of those in March. You won't see that probably until they actually finish cutting interest rates, right? Okay. There's no point in, once they say, hey, we're done, and then the next question will be, okay, when are you hiking again? and that's when they'll start to say, well, once we see the data turn around, or once we think we need to tighten policy because inflation's going up, right? Something like that would be the next step after.
This is all academic as well, but we got memories of Nixon, LBJ, I think back to Harry Truman. The politics of the moment, from where you and your team sits, particularly when you look at the trust market, the repo market, is there politics in this Fed meeting today?
Well, certainly Jay Powell is going to get questions at the press conference about it again, which he's been asked now the last 2 meetings about, if he can be fired, if he can be demoted, right? That's the new thing now. Can Jay Powell be demoted? And that's something that actually our colleagues down in Washington, Elliot Stein and Nate Dean, talked about today in a note out this morning about.
I didn't see this. What did they say? Lisa, you got to tell me when his notes come out.
So their view is that it might be possible for Jay Powell to effectively try to demote, for Donald Trump to demote Jay Powell as the chairman of the Federal Reserve Board, but he'd still be a governor. And interestingly, the chair of the Federal Open Market Committee, so that's who meets today, the Federal Open Market Committee, right? That's all the board members plus the 5 presidents that vote that particular year from the regional Fed banks. They actually choose their own chair. So you could have Jay Powell appoint, I don't know, let's say Bowman as the chair of the Federal Reserve Board, but you can still have a separate and different chair of the Federal Open Market Committee, and that could still be Jay Powell theoretically.
Okay, well, this question just came in. John from Coventry emails in, is Aston Villa going to play their A team today?
Oh God, I hope so, because if we win, we have a good chance of automatic. The new Champions League format is much different, and I don't want to get into it here because today is Fed Day, and I know it's Villa Day too, but it's Fed Day first and foremost.
Ira Jersey, thank you so much. Got to get it because Anurag's got to come. Anurag insisted that he sit in the same chair as Ira Jersey.
Yeah, well,
it's the way it
are
rolls.
we deep seeking? Wait, what are we doing with Anurag?
I don't know. I tried to get Pharaoh in here to talk about Celtic, Aston Villa, and I'm with you. I just don't get Champions League.
No, but I know it's big. I know it's
ESL too.
I don't know. I don't know.
Joining us right now, can't be in the same building as Mandeep. I don't know where Mandeep is today. We are honored that Anurag Rana is with us today, in from Chicago. And I just got to get to it. I'm sorry, Microsoft's a huge deal this afternoon. Is this going to be like Cartier and Richemont, where OMG, they blew it away? Are they like struggling to make numbers? What do you expect with Microsoft this afternoon?
I would say in the last 1.5 years, probably most optimistic going in because I think their supply challenges will be behind, and I think Azure growth rate, they will guide to Azure growth rate going up.
Explain what that is to mere mortals. What is Azure growth rate?
Oh, their cloud computing platform, Azure, which is where all the AI workload is going. That's really what drives the stock, basically. And the growth rate of that pretty much has been slowly coming down at 31%, 32%. I think they will communicate with the street today that over the next 12 months, they could see growth rate improving. I think that's going to be a big deal. And that's the only thing I'm looking from the results point of view. And the second thing is, what's going to happen with CapEx? Is he going to spend more money next year?
Do you want them to spend more money next year? Does the street want them to spend? I mean, the Meta shareholders seem to like that.
I don't want them to spend more money.
Okay.
That's just my choice because I would rather see good growth and margins going up. I don't want, 3-4 years ago, they were spending $20 billion in CapEx. Now they're spending $80 billion. I want that number to come down because I don't want it to be a utility kind of a business where in order to maintain that growth rate, you got to spend this much.
So the deep seek story of Monday, what is the angle vis-a-vis Microsoft? Because I'm guessing most of the questions today, or a lot of the questions today, will come about that as we all try to understand what that news was on Monday.
Yeah, he had a very, funny, he tweeted something very funny, basically sent us to a Wikipedia.
Satya Nadella, the CEO.
Yeah, the Satya Nadella really tweeted a funny thing. He, sent us to a Wikipedia page to explain that under any major technological shift, you get to a point where cost curves start to go down. And when that happens, adoption rate skyrockets. Right. And that's really what he's hoping for, because guess what? He's not making money by selling GPUs and doing, training of models. He's really from people using that stuff. Right. And then he's getting the revenue from that.
For all of you nationwide and around the world, Anurag Rana with us with Bloomberg Intelligence. I just can't say enough about his ability on the cloud, the guidance he has given Bloomberg Surveillance over the years. I got a pre-pandemic Microsoft cash flow of $38 gazillion. They've done a double. They're out at $74 gazillion, 38 to $74 billion dollars. Are they so big where it's a Newtonian plug and chug, where they manage the number? Like they'll go, oh, we got to cut CapEx because we got to plug in this number?
No. They don't think like that. In fact, that's the reason why the stock's actually holding up, because if you really look at it from an operating cash flow point of view, it's far more than the number that you guided. And that's because they are really grabbing market share right now on anything AI.
From who?
Well, this is a brand new market. This is a market that didn't exist. And they are up to $10 billion in AI revenue, the fastest they've ever seen a brand new product do in the history of the company.
What is AI revenue for them?
So for some, if you go to GPT today on your app and you pay $20 a month, and then the background of that query goes to on the what we call as the inferencing revenue that goes to Azure, and because it runs on Azure. If Microsoft sells a product called GitHub Copilot, that revenue gets added up into that as well.
Okay, look, cut to the chase. Tracy was just in. Joe Weisenthal's at home with like 4, 5, 6 AI thingies. I mean, the marriage is threatened.
Yes.
Okay. At Microsoft, Anurag, can I sign up for ChatGPT?
Yes, absolutely. And in fact, you can go to Microsoft Copilot and use it without actually paying for the subscription.
Help me, oh wise one. What do Paul and I do with it? Is it like what's the Amazon thing, Alexa?
Yeah,
go get me another Budweiser. What do you do with ChatGPT?
So Tom, I'm not a big user of it, to write emails back. I don't get that many emails. I reply back to people that I like it. My wife claims in the last 3 months she hasn't written an email by herself. The system writes it for her. Now, she's a faster adopter of that thing. I still like to write my emails back.
Okay, I wrote an email yesterday. Afterthought. Empty the dishwasher.
Sure, exactly.
Is ChatGPT going to help me with that?
Exactly. Why is the stock over the last year, big Microsoft, up only 9%?
I think a lot of that happened the year before. This has been the number one, AI play in software. I think the valuation was already there in terms of they are growing into it. That's what I'm saying. If we do hear comments from him that down the road, overnight capex may go down and as your growth goes up, I think the multiple also goes with it.
Question from live chat. We get a lot of questions from live chat, like, is Lisa married? No, this one's serious. Meta CapEx up 200%, net income margin up 34%. How is Facebook going to monetize their CapEx?
I think that's the biggest question, and this is where Mandeep has talked about it quite a bit. Mandeep covers Meta, and the big so the big question is they also have an open source large language model called Llama, and that's available on Amazon Web Services. People can use it. There are ways they will figure out how that capex or whoever their foundational model, how they're going to go work with other cloud providers and get revenue out.
And I think for Meta, it's about the advertising.
Yes,
better targeting the advertising, using AI to really know what Lisa Mateo likes and buys, and so make that advertising more targeted. That's a lot more valuable.
Yeah.
Lisa, please.
Well, no, because we had this story about Alibaba, too, getting their own AI model that said would kind of challenge or be better than DeepSeek. So where does that stand in everything?
See, right now we are in the large language model wars. Everybody is fighting to figure out who has the best foundational model. But Microsoft is saying, I don't really care because I will use the cloud infrastructure to in the long run, work with all of them. It will happen.
I got 98 seconds left. Where does Apple fit into this, oh wise one?
Apple's going to have a tough time tomorrow evening. I think it's going to be China. China is going to be a struggle. It hasn't changed. The story. The last 1.5 to 2 years, I've been repeating the same exact thing. They're a good company, but China is a problem. China is a problem. We can't change that. That's they really need to change that mindset over there.
I mean, they get 20% of their revenue, roughly. Plus, they build most of their stuff there, so they're dependent on from a supply chain. Isn't it the best thing for Tim Cook to do to just keep going to China and saying, "Hey"?
That's all he has to do, and let's not get into major fights with them. Like that's his. The Huawei phone is doing well there, and then iPhone's not as much.
Help us, a dumb one like me. Is Apple and Microsoft like apples and apples, or is it apples and oranges?
Apples and oranges.
It's not comparable.
No, it's not, because Apple's not spending this much money in capex to create their own models. They're just basically saying, whoever has the best model, I'll use it in the phone. I really don't care.
Okay, so what are you going to listen for in the conference calls tonight?
China. So for tonight, for Microsoft, where capex could go in the next, we already know this year is 80 billion. We already know that. What is it going to be for next year, and where is Azure growth rate? Those two things will dictate the fate of the stock tomorrow morning. Again, how do they monetize LLM? That's exactly question you asked.
Yeah, there you go. So you could do this, Tom. We'll put you on the calls. Yeah.
Be on an AI call?
How are you going to monetize LLM?
Hey, can we say thank you, Stacy Raskin of Bernstein, who was with us the other day?
Yep. Yeah, he was
really smart under the heat of DeepSeek.
Yeah.
After all this, did you load the boat, Anurag? Did you load the boat on Nvidia?
I cannot buy any tech stocks. I just buy the index and relax. I don't buy any.
This has been. Are you going to be in New York again?
Well, there's somebody's buying him lunch or dinner. That's my guess. That's why he's in New York today in a suit. Somebody's buying him lunch or dinner. Just a guess.
Yeah, probably one of our senior officers to say, get a brief.
Yep.
Anurag, thank you so much. Greatly appreciated. Anurag out of Chicago with Bloomberg Intelligence with Mandeep Singh, just the foundation of our technology coverage. We make jokes about it, but these guys, all of them, they're working 24/7 trying to figure this stuff out. And when they do, they turn to Lisa Mateo on Alibaba.
Sure.
What, Lisa? What?
Pull that out of the field.
No, because we did this story earlier that they're saying they're coming out with the one that's better than DeepSeek. Because everything was about DeepSeek. And now they're saying, well, ours is going to be better.
Stock's up 2.8% today.
Yes,
so
it is.
In futures.
Look at you.
Look at that. Well, I was all in on the Alibaba story.
Thank God they didn't change their name.
Oh, jeez.
I can keep track of who's who.
Yeah.
That was brilliant. Anurag Rana, thank you so much. And of course, Mandeep Singh with all of his work on technology. I hope you like that. From New York City on Fed Day, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will U.S. oil production exceed 13.61 million barrels per day for November 2024? You can trade your prediction with IBKR Forecast Trader. The yes, recently at 35%. You can buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast. All right, we've got little movement in futures this morning. This is after a pretty rough start to the week, all over worries of a cheap AI model from Chinese startup DeepSeek. Goldman said the recent sell-off in AI-related stocks in the U.S. was a correction rather than a start of a bear market. Now the attention, though, turning to big tech earnings as well as an interest rate decision by the Fed. We have NASDAQ futures up 0.1%, 31 points. Dow futures, little change, down 36. S&P futures down 0.1% or 8 points. The 2-year yield, 4.19%, little change, and the yield on the 10-year, 4.51%, and that's down 1 basis point. We have shares of T-Mobile up about 7%. Fourth quarter results beat expectations, and that was thanks to growth in wireless subscribers. Also home internet customers. And Starbucks getting a bit of a jolt, up 3%, reported better than expected quarterly results. And finally, I thought this was interesting. Tickets to the Super Bowl, well, it may not cost you as much. TickPick is saying the lowest price seats for this year's game, 37% below last year's, and that's because of two things.
What?
It's not in Vegas, number one. And number two, Chiefs fatigue. People are tired of them. Going to the Super Bowl. That is your Bloomberg Business Flash.
Will Taylor be there?
Oh, yeah.
I mean, she's not making money somewhere. Okay. Fine, thank you. Well, we'll get into that. What do we got? Like a Super Bowl's in 4 or 5 weeks, right?
A week from the Sundays. Fox has got it this year.
Yeah,
So
what we're
they'll
going to
be
do.
minting
They
money.
have it this year. Oh,
Yeah, they'll be
wonderful.
minting money there.
So, what we got here is we got red and the green, and as Lisa said, there's a fatigue to it waiting for the Fed meeting. So, as we get the market open here in 4 minutes, we thought we'd go securitized finance. I mean, it's a surveillance twist. Owning the high ground at Morgan Stanley, Vishal Kanduja joins us right now, head of all of Broad Markets Fixed Income. What is securitized debt that we need to acquire?
I think, good morning. Securitized debt, I think, very directly gives you exposure to consumers and a lot of infrastructure in the U.S. Now, these consumers are ones that are having jobs. We are at 4-decade lows of unemployment. Wage inflation is there, and payments are not getting delayed or delinquent. So a lot of fundamental quality there. A lot of mortgage payments are getting made. We are in a very, very strong housing market. here in the U.S. So I think that you get exposure through the securitized market. And then CMBS is also a part of that securitized market, which now we are trying to get exposure.
Paul wants to get in, but what's the yield on this?
Higher quality is around 6%. If you go below slightly lower quality stuff, gets closer to that 9.5% yield.
Yeah, it's like a Paul Sweeney level.
I mean, I don't know. You Wall Street guys will securitize anything that's not nailed down. What are whether it's car loans or mortgages? Where do you see opportunities there?
Whole business securitizations are big.
Business, what is that?
So you club in a bunch of Dunkin' Donuts, their franchise fees, I think is securitized into a bond. And those are pretty strong cash flows that you're seeing. And I think that the health of the economy, health of the consumer directly feeds into how strong these cash flows have been over the last 3 to 5 years. So some rating upgrades going through there as well as rating agencies are realizing.
How big is this market?
I think this is around
pay attention to you guys?
50 to 100 billion, I think. Wow. I think depending on the tranches, I think. So it's meaningful for what we are trying to do at 200 billion total fixed income.
You're securitizing small businesses.
That's correct.
And then you understand the credit quality of Dunkin' Donut to Dunkin' Donut, each store.
Small businesses, consumers, and we have analysts there who are looking at these. So this is just like one allocation that we have, and then we have, mortgages make up a much bigger market, just the swath of mortgages here in the U.S.
And then do you tranche them out like anything else where there's like better quality Dunkin' Donut and the one at 495 and Route 24 in Boston's a lesser quality and you like have grades of small business quality.
Exactly, and then the time and credit tranching.
Is that what's at Wall Street? I mean, these guys, they'll securitize anything. They can get steady flows.
I got 30 seconds to get the market open. We'll come back on this. Is this really what private credit is doing?
I think they are definitely going below than where we are in terms of the tranche level from the credit tranching. I give you an example of a company that is a lot better known, a lot better sort of history of cash flows. Private might be going slightly different ways on that one.
The last time you were in, the surveillance operators, they got the women with the plugs and the operators. It lit up like a candle. Vishal Kaduja with us. We're going to continue this discussion, I guess, on private credit and the future of Morgan Stanley debt. I mean, you wonder, where it's going. We got to look at the equity markets. It's a snooze fest out there. Look at the red and the green on the screen. It says Fed Day is what it says. You got red and green on the screen. Importantly, the VIX under 17. The VIX down to 16.63 really indicates that deep seat 21 down to 16.63, which means Lisa Mateo will stagger through the market opening.
We will. And here we go. We're off and running. We'll start with the S&P 500. Right now it's down about 0.1%, 9,658. We'll go to the Dow. Little change, down 2 points at 44,858. And finally we head over to the NASDAQ. Wow, down about 0.2%, 38 points, 19,696. All ahead of Fed Day. 2-year yield, 4.19%. Little change. The yield on the 10-year, 4.52%. And that's down 1 basis point. We have Brent crude, $76 a barrel, down nearly 1%. WTI crude, $73 a barrel. We have spot gold lower, $2,758 an ounce. The Bloomberg dollar spot index up about 0.1%, and we have Bitcoin up nearly 2% at just over 102,000. Checking in with the companies that are reporting earnings after the close. Yes, Microsoft down 0.7%, Meta down 0.5%, Tesla down 0.5%. We have IBM up 0.1%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. Vishal Kaduja with us with Morgan Stanley here. Fascinating discussion. So if Edward N. Peck, head of Morgan Stanley, sits down with you, he's mathy guy out of Middlebury. He can keep up with you. What do you brief him on private credit? All these private credit guys are saying, it's great, we can't lose, da-da-da-da-da. You're the adult in the room at Morgan Stanley. What do you worry about with private credit that you brief Mr. Pick on?
I think there are a lot of experts that are briefing Mr. Pick on private credit. I think my vantage point is public fixed income, which I think is competing very hard for that allocation from that investor because yields are very attractive in the very liquid public fixed income as well. Whether you look at taxable, which is around 7 to 8% yield in a very diversified portfolio, higher quality, given just where the Fed is at this point, around that 4.5, 5 on that one. So I'm competing for that allocation for that client to give you that dual mandate. That's what public fixed income is trying to do. Income and then negative correlation. And we've seen it in the first month as well.
Yep. Investment grade versus high yield. How are you thinking about that differential this year?
I think we are a little bit of the camp that IG or higher quality is slightly better in terms of allocation. I think we break down sectors in fundamentals, technicals, and valuations. First two pillars are very strong for both. Valuations is where we fall away. Now, again, giving credit where it's due, high yield is the highest amount of double Bs, highest amount of secured, least amount of duration in a long time. So spreads are commensurate to the fundamentals, but just not relatively attractive to where triple Bs are. Triple B, double Bs are sub 60 at this point. High yield, by the way, is like last month and a half is just tough to chase that spread tightening on that.
Yeah, but it's still the best overall performance as it was last year.
I agree. That's why we're not zero, but we are lower than IG.
Quickly, emerging markets, you got a Republican sweep. How does that impact kind of your view of emerging markets?
I think emerging market is not a monolithic. I think you have to think about country by country, very, very divergent in terms of return. And even though yields are super attractive in a lot of countries in nominal side, but you got to look at the real yields and versus a dollar as well.
Don't be a stranger. Vishal Kanduja, thank you so much with Morgan Stanley. Just brilliant. I learned a lot.
Yeah, I did too. I'm going to go out and buy some of those.
Those are real yields. I mean, that's real money. 6, 7.
I mean, you can do the whole, just buy it and clip it. You couldn't do that for 12 years. On low rates.
Okay.
So these guys, people talk to them at cocktail parties. I mean,
they do.
Even like a decade.
They don't talk to. They're supposed to be. They don't talk to me at cocktail parties. Can I note? Good morning, Dennis Gartman and James Steele. Gold just popped through on the near future, 2,800.
I know.
We're almost to a record high on gold.
Mike McGlone,
no
buy
one's
gold,
talking about it.
Buy gold and sell the rest of the commodities out there. That's what he's been saying. Boy, he's right. Gartman's been
27.99.50.
And what is he?
1, 2, 3
yen.
4, 5. I haven't even looked at gold and yen, but that's like the fourth time we've been here on a weekly chart. Yeah. I guess we got to do more on that. Unbelievable. Vishal Kanduja, thank you so much. It is Fed Day. We'll do our coverage at 1:30 this afternoon. John Farrow demands we talk Celtic, Aston Villa during Fed Day. We'll see if we get there. He's all Champions League football this morning. But seriously, on equities, bonds, currencies, commodities, sport, Microsoft, and Facebook after the market close. From New York City, it's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Wall Street kind of in this wait-and-see mode ahead of a decision from the Fed on interest rates. Right now, we'll start with the S&P 500, down about 0.2%, 14 points. The Dow up about 0.1%, 66 points. The Nasdaq, though, seeing a little bit of a head downward, down about 0.5%, 95 points. We'll head over to the two-year yield, 4.19%, little changed, and the yield on the 10-year, 4.53%, and that's little changed as well. We'll go to Brent crude, $77 a barrel, WTI crude, $73 $50 a barrel. We have spot gold at $2,758 an ounce. And then we go to Bloomberg Dollar Spot Index, up about 0.1%. We're still following shares of DJT. They're up 8% after Trump Media Technology launched this financial services and fintech brand. It has a focus on crypto, also customized ETFs. And then a few earnings we didn't get to because of the news flow today. Hess, it reported a rise in profit and revenue for Q4. That was thanks to higher production values, but its shares are down about 0.4%. And VF Corp, they're the parent of brands like North Face, Timberland. Their shares up nearly 6%, and that's after reporting a sales beat. And finally, Paul, you said earlier Fox was airing the Super Bowl, so I want to hit advertising really quickly. Super Bowl ad prices reached a record high, over $8 million for a 30-second spot. Snack beer tech companies, but fewer movie trailers because they've been taking a hit too.
I remember when it hit at 1 million. That was big. I think CBS had it that year, and they made a big deal about it. Mel Karmers, and we got $1 million for a 30-second spot.
There's a name for the
million.
Yes, exactly. Now it's
for a
8,
30-second spot.
And I read, it's a blurb, I don't have it in front of me, folks, to cite, but autos are a little lighter.
Oh, auto
this time
too for the
around.
Super Bowl. Huh?
Yep.
Okay, can I just say I'm a sap and I wait for the Budweiser commercial?
Oh, the Clydesdale.
We'll see.
Well, I mean, I think typically you get 30 million people to watch an NFL game. Now it'll be 100 million for the Super Bowl, and presumably that incremental 70 they're there as much for the ads, the commercials, as they are for the game.
But
maybe.
again, and Brian Eggers is going to join us. So we're going to do more on this gambling in America, which Lisa's had some real. Lisa, you and I are worried about this.
No, it
with
is.
the kids.
Yeah,
I'm
the kids.
sorry.
I mean, my son's on it. He knows not to go beyond a certain part, but they're
Really? Your
investing
son is,
heavily
like-
into. Well, he invests they're buying these websites to give him the data so that he can make the right bet, and he's paying this website, but he's making more, so he says it's worth it, and it's just I'm like, what are you doing?
I know. I'm glad it's not an issue of my family. Thankfully.
Can I ask a dumb question? Like in the Super Bowl, you can bet on an outcome of the second half while the third quarter's playing.
Yeah. The amount of prop bets just
Prop bets, is that what that's called?
Yeah, and with technology, there's almost infinite, limitless number of bets that can be made. It's almost like making a market. If you think one thing on a stupid event, and I think the other, boom, they will structure a bet
And
for you.
parlays. I don't even understand what it is, but that's apparently a big thing.
Okay.
I don't know.
It is Fed Day, and this afternoon, what will happen in the press conference is there's 4 or 5, maybe at the most 6 people where the room comes to a silence. One of those is Michael McKee. The running joke is he gets the last question because they're afraid of him. Michael, I put out on Twitter, everybody thinks this is a snooze fest. All my radar is up. All my radar's up, Michael McKee. What's going to be the surprise in the press conference?
Oh, Tom, I think I'd calm your radar down a little bit. If there is a surprise, it might be that the Fed gives us some sort of indication of when they will end QT. They haven't talked about that, but Wall Street essentially believes that they will reach the limit of reserves that they want to be at by sometime mid-year. So they might give some sort of indication of when they plan to stop that. But it would be very hard for the Fed to make any monetary policy change at this point without it seeming to get tied up in politics, and they don't want that.
I busted Greg Mankiw's chops once, and I said, Greg, there's a point where your voice changes when you get upset like a professor up at Harvard teaching at 10. We heard that from Powell. His voice changed on Fed independence a meeting or two ago. He's going to be asked today a rude question by Mike McKee on Fed independence. Is he going to be heated in response?
Well, the good thing is, unlike Professor Mankiw, Jay Powell can't throw an eraser at us. But I suspect that he would be controlled anger might be the way to put it. At this point, he's talked about it enough. He's been asked about it enough. He's not probably going to have to draw any red lines by appearing really angry. Although our Tom Orlick from Bloomberg Intelligence this morning suggested that I asked Jay Powell if he's going to take the president's buyout.
Exactly right. Michael, it seems like I'm hearing almost as much chatter about possible rate hikes in 2025, late 25, as I am rate cuts. Does that get reflected in the Fed's language at all?
Not going to be reflected in the statement at all. The question is whether Jay Powell goes beyond what he said in December, which is that rate hikes are not on our horizon right now. If the inflation rate doesn't come down, it could raise questions about whether the economy is running too hot, because tomorrow we get fourth quarter GDP, and according to the Atlanta Fed, it'll be over 3%. The Bloomberg consensus is 2.7%. That's definitely higher than potential. So does the Fed need to take some additional action? The question is, does Jay Powell think there is a benefit to suggesting that's a possibility? I would think not.
Okay, Mike McKee, one more question before you go into makeup for the Fed meeting this afternoon. Alan Greenspan, chapter 23 of any economics textbook, including Mankiw, the stock market matters. Does Jay Powell believe the stock market, a bull market, matters?
They think it matters in two ways. One is sort of a signal of how people feel about the economy, although that's not something you can really make policy on. But they do look at where they are with gains in the market in terms of the wealth effect. People who make a lot more in the market will tend to spend more, although that's the upper levels of income, which don't spend as much discretionary as lower levels, but it can impact the overall growth rate. So they do follow it, but it's not a decision-making tool.
Right. Mike, in honor of Bob Uecker, the late, great Bob Uecker, I want you in the front row at the press conference today. Michael McKee truly leading our Fed coverage, and we'll do that at 1:30 this afternoon. Lisa Abramowitz, Jonathan Farrell, and myself. Right to it, red and green on the screen, the VIX 16.89. Our news in New York City, Michael Barr.
Thank you very much. President Trump's media brand is getting into the financial services business. More from Bloomberg's John Tucker.
Trump Media and Technology has launched a financial services and fintech brand. It's called Truth.fi. It's going to focus on crypto and customized ETFs. And the company says Charles Schwab will broadly advise on investments and strategy. Trump Media says it will also invest as much as $250 million. A sales pitch from Trump Media CEO Devin Nunes says developing an American-first investment vehicle is another step toward our goal of creating a robust ecosystem through which American patriots can protect themselves from the ever-present threat of cancellation, censorship, debanking, and privacy violations committed by big tech and woke corporations. I'm John Tucker, Bloomberg Radio.
Caroline Kennedy says she is warning senators that her cousin Robert F. Kennedy Jr. is, in her words, a predator. She's urging senators to reject his nomination as Health and Human Services Secretary.
I've known Bobby my whole life. We grew up together. It's no surprise that he keeps birds of prey as pets, because Bobby himself is a predator. I urge the Senate to reject his nomination.
You can catch coverage of the hearing starting at 10 a.m. Wall Street time on Bloomberg Radio and the Bloomberg podcast page on YouTube. Millions of people in the federal workforce could be affected by the Trump administration's effort to eliminate their jobs. In a memo, employees from a wide swath of government agencies got an email that offered them at least a 7-month buyout if they quit by next week. Critics are concerned that it's an effort to purge the federal workforce with Trump loyalists. White House Press Secretary Caroline Leavitt claims it's just a cost-cutting move.
If 5 to 10% of the federal workforce resigns, it will save taxpayers tens of billions of dollars.
Leavitt spoke on ABC's Good Morning America. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks. I missed the Detroit Lions colors. Yep. We had a lobby effort to make the buttons red in the studio, and that got
for the Chiefs
nixed, as they say.
Green for the Eagles.
I say, Michael Barr, thank you so much. There's just so much to talk about here. Can I just say I'm waiting for the calm of Facebook and Microsoft earnings.
After the close,
something predictable, comes out. We'll have full coverage of that for you. Coming up, we got a real special treat for you. I don't know anyone who's not in Europe this summer. Michael Barr's doing if it's Tuesday, it must be Belgium. So we'll have to see on there today. Red and green on the screen on this Fed Day. The Fed decides at 1:30.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
It is not too early. Forget about Fed Day. The days are getting longer, which means we're planning European travel. Joining us now, Surveillance Europe on $5 a day correspondent, one Charles Pellet. Charlie, what do you have this morning?
I am so unbelievably excited. Just imagine this. Picture this. Close your eyes. Just imagine me, you, Paul Sweeney, John Tucker, strolling arm in arm, the romance of Paris, just enjoying a beautiful day, strolling along, looking at all the wonderful sights and scenes. And you say to yourself, Charlie, how are we going to get all of us over there cheaply? And better still, it's Fed Day, earnings day. How are we going to get over there tonight? I've got a fare for you. I don't want to do a commercial, but I've got a fare. We can hop over Newark Airport tonight. French Bee is the airline. $149 leaving at 11 o'clock tonight
do you
into
stand
Orly.
or do you sit?
No, you got to pay for breakfast. You got to pay for your dinner. But $149. My point is, there are deals out there. And I know you guys, you know, listen, I don't have Tom Keene bucks or Paul Sweeney bucks. You guys are flying the major carriers. $5.99 leaving tonight on some of the big boys.
Delta sent me an email yesterday. I was thunderstruck at how cheap economy was.
Really?
I mean, I guess there's empty seats. Charlie, what I'm looking at is you need new travel authorizations.
Yes.
To get through CDG or LHR.
Correct.
Have you experienced
this?
this?
100% yes, and it's not just that. I've got a trip coming up to Tel Aviv in a couple of weeks, going over for a coffee and a beer, don't ask. But I had to get a special visa for that.
It's a new world of paperwork.
It is, United Kingdom, exactly. But that said, it does not take that long. You got to do it. And for the United Kingdom, I believe if you are transiting, you've still got to go through that nonsense. So
transiting means just going through Heathrow and paying the tax.
Just something that you got to think about. But so what do you think about that 149 deal to Paris?
Fantastic.
I mean, it's unbelievable, right?
Yeah,
exactly.
They're giving away economy seats right now.
But I think some of these countries that are like, I think we've had enough of these Americans. I mean, yeah, we get it. The dollar's strong.
Charlie, we make jokes about it, but there was an article. I don't have it in front of me, folks. The crowds, Charlie, in the summer.
Exactly. Barcelona,
it's all become Venice.
I've seen it on TikTok. Venice as well. But you've got people out there with squirt guns with water pointing them at tourists because they don't want to have that many tourists. Now, many communities are thinking that's a problem. Everybody should have too many tourists.
Okay, but Macron is making the Mona Lisa different at the Louvre.
Exactly. Little separate room.
Why shouldn't they charge thousands of people to see it? I mean, I don't. What's the guilt here?
Yeah, it's
their territory.
Congestion pricing for museums, perhaps, is what you're suggesting.
Yeah, exactly.
Right? Same idea.
Right. I'm going to Italy in the fall, so we'll see how that goes.
Exactly. But just one more thing at the other end of the scale for Tom Keene, Paul Sweeney, you guys spending big bucks. You're strolling down the Champs-Élysées because that's the place that you want to be. Sing along if you want. But there you are. You're on the Champs-Élysées. You can get a hotel, the Bulgari, $2,500 a night. $2,500 a night. Now that's beyond my price point.
All right, so you can get over there cheaply, but once you're there,
exactly.
Okay.
But that said, in preparation for you guys, I was looking on Expedia, $100
We're
a
out
night.
of time, but do you agree with me, Charlie, that it's not the airlines, it's the hotels that are unreal?
No. In terms of the price, there are always deals to be had, and it depends how much sacrifice you want to make, how much time do you want to spend on the metro.
What, Fontainebleau?
What's that?
Stay in Fontainebleau?
Well, maybe not that, but on the other hand, it's what my rule of thumb is. I want to be downtown. I want to be close to where people are, and I'm willing to pay a premium for that.
What are you doing in Poland?
Poland, going to Krakow, and then it's not Poland as well, but also going to Budapest. All part taking a train from Budapest up to Krakow. So
John,
I
what
like
are you
trains.
doing? John, are you taking the C streak?
I'm going to Bayonne. And I have to pay for that.
Yes, you do.
And I got Cabo San Lucas in there as well. I'm a lucky guy.
You are. There you go.
It's Europe on $5 a day. Charlie Pellet, thank you so much.
Next time we talk about getting there via Morocco. But that's
what?
another conversation for another time.
I'm booking December in the next 2 weeks. That's how bad it is.
149. We're leaving tonight, baby.
We're doing San Francisco music today, and that can only mean one S. Miller. Steve Miller on this Fed Day.